Hello guys, good evening. Hello. Today we will be discussing chapter 6A deductions. This chapter is like carries good marks, like around 6 to 10 marks, and it has quite a good amendments as well. So I felt we need to have a separate video on this, even though we had a video 6 months back, but there were some changes prior to that. So how am I looking, or how is my audio and video? I'll wait for a couple of minutes. Let's see how many of you joins. So as I said, today's our agenda will be to complete the entire chapter 60 deductions, not just the provisions, but also a few illustrations, so that we are comfortable in solving the illustrations in the examination. So generally, you might expect a numerical problem for this chapter 6A. So that is the reason why there are some illustrations. I want to touch upon those illustrations as well. So can someone confirm that if my audio and video is everything is fine and we are good to go, any lag or any disturbances or noises from voice? Just confirm me if everything is fine, then I'll be starting it. Okay, I'll be starting then. So I was expecting if anybody could answer this question, but it's fine. I will continue it. You're already aware that we have 5 heads: salary, uh, income from house property, PGBP, capital gain, other sorts. So all 5 combined, we call it as a gross total income. From the gross total income, we'll be having this chapter 6A deductions from section 80C to 80U. Put it in another way, like for salary we have separate deduction, for income from house property we have separate deduction, we have for PGBP we have separate deductions like 30 to 37 and relating provisions, and for capital gain also 54 you have separate deductions, and um, for other source also you have separate deductions. So they are deductions with respect to or in particularly for that particular head, but overall capital gain and income from other source, you are calling all this income as income gross total income. From this gross total income you will be deducting chapter 6A deductions. Generally we call it as chapter 6A. Generally we don't remember anything with the chapter numbers, but this is one chapter where we kind of get used to it, like chapter 6A deductions, chapter 6A deductions. So chapter 6A deductions includes it covers from 80C to 80U. So all the provisions I'll be discussing, and there are few provisions which are applicable exclusively for CMA inter students as well as CA final students. So those provisions I'll tell, if at all you happen to be a CA inter students, those provisions are not applicable, but just make sure that before reading anything, if it is not covering your particular portion, you can skip that point. I'm including comprehensively is that our viewers, some of them are doing CA and some are doing CMA, some are doing CS, right? So I want to cover up everything together. So if at all any particular section is not applicable to you, just look into your study material and index may, you will find out which section is applicable, which section is not applicable. So let's start. Section 80 IA. So these sections I have given section wise, not necessarily that you have to remember sections. I'll tell you wherever the section is absolutely important that you have to focus more in remembering it. These are just to make us understand. In computing the total income of an assessee, there should be allowable from the gross total income deduction specified under section 80C to 80U. Just now I said it. While once you complete your gross total income, once you calculate your gross total income, you will be calculating deductions from 80C to 80U, and the aggregate of your 80C and 80C to 80U should not exceed your gross total income, which means that for everything I'll be giving a random example just to make that point clear. You might expect that question in MCQs like 1 mark, not more than that, but still we will cover that. My salary is 5 lakh rupees per annum. Okay, that is computed like after standard deduction and everything. I don't have any other income from house property, PGBP, capital gain, other, right? So from this I will be deducting chapter 6A. So when I deduct chapter 6A, I cannot have more value than this gross total income, which means I cannot have my chapter 6A deductions as 6 lakhs rupees and say that 1 lakh is negative. So shall I file for refund? Can I carry it forward for the next year? These kind of questions we often get if you are into CA articleship or someone. People say that I don't have any income, but I've invested in insurance like LIC or somewhere. Can I claim for refund? So this is not applicable. This is not available, which means that because of your more deductions, government will not give you any refund. So there is no question of carrying forward these excess deductions to the next year or claiming it as a refund. That is like out of your imagination, but it cannot happen. And then there are certain deductions. If those deductions are given to AOP or BOI or AOP or BOI or firm, the same things are not available to the members, which means that there is one particular section like 80, IA, IB, IC, ID, like these are all various sections are there. AOP in its capacity availing some benefits. So when AOP is availing that benefit in its capacity, the members of AOP cannot claim it once again. So see, for one expenditure or one investment, there is only one benefit only one's benefit. Put it other way, HOF is claiming some expenditure as some deduction, 80CK. So the members cannot claim again. Once it is claimed by HOF, that is fine. So there cannot be two deductions for one expenditure. And again, when you are exporting something, there is a section called section 10A. We will discuss that also. When you are exporting something, you will be given some benefits like you need to repatriate foreign exchange to India within certain limit. Okay? So when you get a benefit under section 10A, you cannot get the benefit again from chapter 6A heading C. So again, the same point I am saying, you cannot have double deductions for the same expenditure or same incentive. Next, for you to claim this 80C to 80U, you have to mention these details in your return of income. Like you have to mention it. What do you mean by that? See, this year I am making a fixed deposit of 1 lakh rupees. So this is like fixed deposit having a tenure of 5 years. So that is eligible under 80C. So though it is eligible, I have to claim it. So just because I made an investment or I made a fixed deposit with some bank, ICICI or some bank, don't think that it will automatically be captured. Maybe in future if that comes, it's well and good, but you have to mention that in your return of income. And again, you need to file the return of income. Like one is like all the deductions under section 80C to 80U, you have to mention in your return of income. At the same time that you have to file it. Like you are writing in a piece of paper, you have to submit to the government. Like you cannot make an application to the CBDT, but you can only file return of income. Like there is no concept of application here. So it is important as per this section. This is very important. Whenever you are claiming 80C or 80D or any other section, like any benefit, that you have to filing the return of income. So that is the reason why filing the return of income within the due date, like before the due date under section 139(1) is absolutely important. When there is a delay in filing your return, there are a lot of sections, you will not get any benefit. So only exceptions like your unabsorbed depreciation or in loss from house property, these are two exceptions. But other than this, you have to claim in your return of income and you have to file it before the due date under section 139(1). So that is like basic understanding of what this section is. maybe you can expect 1 mark, or just it's for our general understanding of the section. Now comes to the main crux. There is something called, okay, so we'll do that. So let's focus on the present topic, guys. You have any questions, anything that you wanted to ask someone but you couldn't ask, something like that? I'll do my best to answer your questions no, within the purview of my knowledge. So just focus on the present topic whenever we are discussing anything. Anything else we can talk little later, or maybe when we are closing the session we can talk. Yeah. So now chapter 6 C में there is a heading C. So heading C में you will have all these benefits which are generally applicable for CMA inter students. It is more applicable, like I have seen their papers, there are more questions based upon this, and for CA final and CMA final again this is absolutely necessary. So I would say more important, just check your index as to which section is applicable. If it is not applicable, leave it. If it is not, if it is applicable, pay attention. It's not like tricky sections. I'll read it once. Anyway, we will be discussing in detail once we go depth into this. ATI, deductions in respect of profits and gains from undertaking or enterprise engaged in the infrastructure development, operations, maintenance, generation, transmission or distribution of power. So infrastructure development, you might have heard it in section 35 AD. If you have done my PGBP chapter, I've explained specified business, there is this also. So I mean government has notified this also. So until that provision is effective, like I think 1st April 2017, I just see the date, till that time SSCs used to claim the benefit under this section. Elaborated discussion we will do, but for timing just an overview of it is, for infrastructure development people claim it under ATIA, it's for companies. ATIAB, deductions in respect of profit gains by or enterprise engaged in the development of SEZ. So in SEZ, special economic zones, if you are a developer, you are a developer of the SEZs, you will be given certain extra benefits because you are developing. See, SEZ development, like they are constructing buildings in a large scale, like commercial properties, so that the different companies come and they start their business. Example, you might have seen all IT companies are there in high-tech city. So where do they go? I mean, foreign companies, they come there, right? So they need a place, commercial place. So that is developed by the SEZ developer. So what they are doing is indirectly they are allowing the growth of the economy. So that is the reason why they needed more support. They needed more tax incentives. So this is for them. ATIAB, ATIAC. I think this also we have discussed in our capital gain chapter. Capital gain chapter mein, like you sold your long-term capital asset and you got a long-term capital gain, which you want to, which you don't want to invest in another house property or or you don't want to invest in 54 EC bonds. So there was an option that you can start your own startup. So that section is section 80IAC, and all these sections we will discuss at the end. 80IB, deductions in respect of profits and gains from certain industrial undertakings other than infrastructure development undertakings. So this also I'll tell for this is something for northeast states because they are not as developed as other states. So government are trying to bring them also equivalent to other states, like other states that we have. So they were given more benefits, like if you happen to be there and you start this business, so we'll be encouraging you to not pay tax for certain number of years, like 10 out of 15 years, like initially 15 years you can, for 10 years you need not pay tax. Like that the government is giving push to the entities, like people to go there in north eastern states and start their own business. And 80IAB, deductions in respect of profits and gains from housing projects and housing projects rental projects. So this is for I mean affordable houses. We have studied this multiple places. So whoever is coming as a construction company and constructing the buildings at a affordable level, I mean not like very lavish or any luxurious, but for general people. So again they have given the conditions when you call something as affordable and eligible for this section. So they will claim it under 80IBA. 80IE, deductions in respect of profits and gains from manufacturing of production of eligible articles, substantial expansion of manufacturing or produce of any eligible article or thing, or carrying on eligible business in northeastern states. So I think I said it for other sections. So this section 80I is for north eastern states. 80JJA deductions in respect of profits and gains from business of collecting and processing biodegradable waste. So now like more companies are coming, more manufacturing is happening. So we need someone to uh, process a biodegradable, I mean like all scientific research, there will be a lot of wastage, right? Pharmaceutical, there will be a lot of wastage. So this waste someone has to no, process it, no? They have to degrade it, and so that you don't dump into the rivers, you don't dump into oceans, or you don't dump into anywhere and spoiling the atmosphere or environment. So we need a proper place in, we need a proper mechanism where you scientifically you process it so that it is not harmful to. Yes, all of the PGBP is allowed as a deduction. So whenever you are into this business of biodegradable, you will be given more benefits, because that is a need of the hour for the entire world, and especially for India also, because we are growing and we are having a lot of companies in place. So we need someone to do this. So to encourage them, we are giving these benefits, and all those conditions in detail we will discuss. But this is the just overview. 80JJAA deductions in respect of employment of new employees. So this is absolutely important, guys. I have seen this in CA final also. You know, at least like 4 or 5 times it has come since its inception. Like whenever this section has introduced from them, this section has been asked recent, multiple times, and for inter level also there is a possibility you can expect a question on this, like to encourage the companies to manufacture, hire more people, or not like normal employees, like workers or no workers or people who are directly involved in the production, just like encouraging the make in India movement. So whenever you hire more people, so anyway you whatever you pay to them, you will debit into your P&L, that you know it. Other than that, 30% extra will allow you to debit it. Like if I'm paying, random example I'm telling, 1 crore to the new eligible employees, 1 crore I will debit it in normal course of place. Again under this 80JJAMA I will claim 30% extra. So this is a benefit for Make in India movement. So this is absolutely important. Remaining you can skip it. I'm saying even skipping this also, you are good with your examination, it's fine. Just for our understanding I will be discussing everything, but you don't skip this point, okay? 80JJAA, don't skip it. And we have questions I will be solving in the class now only. Deductions in respect of certain income of offshore banking units and IF. So by now you might have got bored by listening to this word IFSC, International Financial Service Center. They have exemptions in so many places. Like while transferring, there has to be STT has to be paid. But I said for units located in IFSC, there need not be any STT on that. And for others it is 5% if you are paying any interest, 194A ke hisab se. And for them, these people 194 LA, LB, LC, LB, they have a different rate, 4% only, not 5%. So everywhere they are given more benefits. So here also, like you are in the banking company and you are situated in IFSC, you will be given more benefits. It's just like an international transaction. So they deal with all foreign exchange conversion, all this only. So this is more of a need of an economy than just a business point of view. So that is the reason why companies government encourage these companies. Deductions in respect of inter-cooperative corporate dividend. So at CA final I have seen one question has come relating to this, which means that I am a holding company and there is a subsidiary company. So subsidiary company is declaring dividend to me, so I have to pay tax on that dividend, right? But at the same time I am also declaring a dividend during the year. So should I deduct one more time? Because there are 2 times of taxation is happening. One is when they are deducted, when they declare dividend, they are paying, and again out of that money only again I am declaring dividend to my shareholders. So again, should I pay tax on that dividend distribution tax? So there is a relief given to them. If you are receiving dividend from your subsidiary and in the same financial year you are declaring dividend to your shareholders, conditions I'll tell you, certain relief is given so that you don't have to pay tax on double time, like once by your subsidiary and once by the holding company. And cooperative societies ke liye, so there are a lot of deductions. So they are like, India is predominantly agricultural based company, and government always tries to encourage farmers or agricultural sector, and cooperative societies also. Like this is somewhere somehow you are kind of helping for to grow in their respective businesses and all. So for them also a lot of deductions are given. ATPs, again this is important. An intercorporate dividend, if you happen to be a final student, this is also important. And deductions in respect of certain income, producer company not that important. Producer company bole to like Amul, you see, right? All this producer company bole to the farmer himself is a producer, so they all come together and they start a company. Producer company, there's a concept under Companies Act 1956. It is still there. So so for these people, again, some benefits are given, not that important for examination, but just there is a section for that. Okay, so certain deductions are there for that. Something like if you happen to be joining any milk dairy farm after your qualification or during qualification also, so there's a possibility that the company might have been registered under section under 581 something some section under Companies Act 1956, and they will be getting these benefits. Deductions of royalty of income of authors of certain books other than textbooks, and deductions in respect of royalty of patents. So this is also absolutely important. Out of this section, out of this section C, these five sections are absolutely necessary. Please don't ignore these sections. If you listen to the entire session today, I mean, it might be 3 hours and 2.5 hours, hopefully I will be covering everything, and that will be really sufficient. Once you listen to the session, I'm sure you will remember in the examination. Once whatever the questions are there, you also solve after me. I mean, like once I give this PDF in the share folder, you can also download and you solve these problems once again, or maybe whatever the questions are there in your respective book, you solve it, then that's it. Explanation wise, we will be discussing. Numerical problem wise, we'll solve few here, few you solve on your own. Yeah, so that is a big understanding of what we are going to do today. ATC to ATU, heading C May, these sections are important. 5 are absolutely you cannot ignore. Remaining, or you can ignore for time being. It's like examination, it's not that important, but in reality it is important. These 5 sections, please don't try to ignore. Yeah, so now come to section ATC. So this is a most often heard section in the market. Now also, like just 5 days before we are closing our financial year, right? So a lot of people ask, I mean, we get a call also, sir, do you want to make any investment? Are you having any plans? So do you want to open this account? Do you want to invest here and there? So ATC is the only section general people aware of it. So which means that out of your gross total income, 1.5 lakh you can invest in any of these things. I will read it in examination. You don't have to mug it up. Just read it before going to the examination. I'll just read it now only. For an individual, you can take it, or for an HUF, both it is applicable. Contribution to unit linked insurance, contribution to unit linked insurance plan, ULIP. So ULIP also you are eligible. You can make that contribution in ULIP, but again they have some conditions. If you happen to be an individual, yourself or spouse, your husband or your wife or any child, on these people you can take it. If you are HUF or any member of the family, you can take it. Okay, so this investment contribution to unit linked insurance policies are for yourself, your spouse and your children. Okay, and if you happen to be a HUF, any member of the HUF, contribution to unit linked insurance plan, LIC mutual funds, premium paid in respect of life insurance policies. So this is generally what we discuss, and there are 3 dates you have to mug up these dates. I mean, you have to be really good with these dates. 1st April 2012. So if you have taken the insurance policy before this date, your premium of insurance should not exceed 20% of the sum assured, which means that sum assured I'm taking 10 lakh rupees, right? That is a policy I want to take. So the premium that I pay to them on a yearly basis, okay, sometimes it can be quarterly, but on a yearly together, it should not exceed 20% of it. So which means I should not be paying a premium of 2 lakh rupees more than that. If I'm paying that, the excess is not eligible, only till that that 20% only eligible. But if you happen to take any insurance policy pre or post to this date, 1st April 2012, it is 10% of sum assured. Just that you just remember the percentage, you remember the date, that's it, nothing else is important here. But for 1st April 2013, if a person happens to be suffering from a disability under section 80 DDB, we'll talk now only. 80U, there are 2 disabilities, like one is 80 DDB is a ailments, 80U is like a status. I mean, like someone is handicapped. Okay, so I mean it's a it's a status of a person. 80 DDB is a ailment, certain ailments a person got attracted to. Okay, so if he is suffering from these ailments or disabilities, and if he is taking the policy prior this, it is 15% of sum assured. These three has to be on your fingertips. 1st April 2012, prior to that 20% of sum assured, post that 10% of sum assured. And if a person happens to be dealing with 80 DDB and 80 U, it is 15% of the sum assured post 1st April 2013. Okay, so generally this is a theoretically we say it, but in reality you might have seen otherwise also. Generally all insurance companies, they come up with such a plans wherein while giving you a pitch only, sales pitch only, they'll say this is eligible for ATC. So in order for a policy to be eligible for ATC, they will frame the policy in such a way that it will not exceed your 10% for a normal person, 15% for a disabled person. But for examination point of view, just remember these 2 points. Okay, and there is an amendment with respect to 1st Feb 2021 के बाद में, if you are taking any ULIP and the premium that you are paying is 2.5 lakh and above or more than 2.5 lakh, not just one ULIP, maybe you are taking multiple ULIPs. This point I in capital gain chapter also, there is lot of linkages, lot of dots that we are connecting it. Hopefully you are also understanding that. So generally earlier this ULIP was completely tax free. I mean, which means that if it is not going beyond the 10%, it used to be kind of eligible for ATC deduction only. But the point here is that last year there was an amendment. They are saying it, if your ULIP premium is more than 2.5 lakh for a single policy, or if you are taking multiple, all put together it is more than 2.5 lakh, then it is not eligible for 80-10-10 DD, which means whenever they surrender it, whenever there is a what you call it, whenever completion of the policy, when they pay it, right, redemption you call it, payback, when it happens, if any of the policy amounts, premium amount is exceeding 2.5 lakh, it is not eligible to be exempted. So exemption under section 1010D would not be available with respect to ULIP issued on or after this date, 1st Feb 2021, if the amount of premium payable exceeds 2.5 lakh for any of the previous years during the term of the ULIP. During the term, in any one of the years, if you are paying a premium of more than 2.5 lakh, this is just to catch hold of the high net worth individual. ULIP of 2.5 lakh also is a very good amount, right? So for them, they are saying if it is exceeding 2.5 lakh, whenever there is money coming from the insurance company, it is not exempt. However, in case of any sum received on the death of a person, exempt under section 1010D would be available even if the premium is exceeding 2.5 lakh, which means I have taken a ULIP and the premium is 3 lakh rupees. Okay, I am taking it on today only. So 25th of March I am taking it. So post 1st Feb 2021 only. So I am paying 3 lakh, which means it is more than 2.5 lakh. So this is violation of the condition, right? And if the policy is for 5 years, example, after 5 years they are paying the money to me, it is not exempt that time, because every year there was a increase or there is a violation of the premium amount. So whatever is more than that limit, whenever they are paying that time, they will be deducting TDS also, and I am also paying tax on this. It's like an income. Okay, so coming to the main point, if it is like that, I mean, if I am surviving and receiving the money from the insurance company, it is taxable for me. To this part, it is clear for you. But if I am dead and my family members are taking this money, so that time it is not taxable, which means on the death of a person is legal heirs or legal heirs or family members are receiving this, even though there is a violation of 2.5 lakh condition, still it is not taxable. Okay. Exemption and exemption is not available in respect of amount received from insurance policy taken for disabled person under section 80 DD. This also I'll explain in a detailed way. So it's just like a story, guys. You listen properly, you will understand it. So there is one section 80C. It's all insurance policies. 80D ATD is for, ATC is for life insurance, ATD is for health insurance, like insurance policies. ATDD is for if at all I am incurring any expenditure, or if at all I am taking any policy of a dependent disabled person. Okay, so there is a person in the family who is disabled, so that person is dependent on me. So if I am taking a policy on that person, so that whenever, like if his or her health deteriorates further, I can have that money from the insurance policy. I am taking a policy in the name of the disabled person, so that it will be useful when the situation arises. But that person is dead, assuming. So when the person dead, obviously that LIC or insurance company will make them payment to me, right? So that time generally it is exemption. Whenever you are receiving insurance amount from the insurance company on the death of a person, it is exempt. Although it's not taxable at all, but because it is on a disabled person, it is taxable. The reason is that, so you don't want to enjoy the amount that you are taken on a person who is disabled, right? So it is like if I'm taking an insurance policy on myself, and if I die and my family members receive it, so for them it should be exemption, they should not be paying tax. But here the purpose of taking that insurance is not for my well-being. The purpose of the policy is to take care of his expenditure. When the person himself is not there, there should not be any exemption. Put it simply, when the when we take the insurance policy on the disabled person and something happens to that person, or if he dies, whatever the money that we receive from the insurance company is taxable. And keyman insurance policy also not exempt, it is also taxable. I think in every session I was discussing this keyman insurance policy, right? Whoever is very important to the organization, companies take the insurance policy on the health and the life of a important person in the organization. So if whenever they are making payment to the insurance company, is it a business expenditure? Yes, PGBP may, they can debit their P&L. Whenever the money comes to the insurance to the company, is it taxable? Yes, it is taxable. If the money is received by the company, it is taxable as a PGBP income. If the money is received by that keyman insurance only, it is taxable to him as a salary. If the money is received by any other family members, it is taxable to them as an income from other sources. In all the three cases, it is taxable. It is not exempt. Okay, so next, premium paid in respect of contract for different deferred annuity. So if you are taking any deferred annuity, like people pay lump sum amount, but they get the money from the insurance company, like people who are taking the retirement generally take this. And any sum deducted from salary payable to the government employee for securing a deferred annuity, contribution to statutory provident fund, public provident fund, or recognized provident fund, any provident fund. PPF is like general people, SPF is for government, and then recognized provident is for normal employees. So all this it will come under ATC only. I'll just repeat this point, maybe it might be useful for you while doing the salary head. 12% will be deducted on behalf of employee, 12% will be contributed on behalf of employer, right? So two portions are going to the fund. So two portions are going to the fund, right? So whatever the employer is giving, no, so that is taxable to the employee, and they get the deduction here. So whatever they are contributing, it is because out of this taxable salary only they are contributing, right? So they will directly take it here. I am repeating, when employer is directly contributing to the employee, so it is taxable to them as a salary income. It can and again they will take the deduction under this section 80C. Automatically it happens, so it's not that people do it anything manually. Whenever you have your CTC, so CTC includes employer's contribution to the recognized provident fund, right? So that portion will be your salary. That is the reason why we call it CTC. But while filing the return of income or while doing the 192 TDS calculation, this will be considered under 80C under this head. And any sum paid or deposited in Sukanya Simriddhi accounts for a girl child, this is something 2 years, 3 years back it has come. So here also you can invest. And subscription to National Savings Certificate 8, contribution to annuity plans of LIC, subscription towards notified units of mutual funds. So mutual funds or UTI funds you can invest. Contribution to notified pension funds set up by the mutual fund or UTI. Contribution to National Housing Bank tax saving term deposit subscription to notified deposit schemes like public deposit schemes of HUDCO. So that was one of the notified deposit by the government. You need not remember anything. As I said, it's just to be understood. Nobody is expected to remember all these points, like wherever you have to invest. If you are financial advisor or insurance agent, will remember, otherwise it's not required only, but major portions we have to be very good with. Or you can pay your kids education fees also. Payment of tuition fees to any university, college or school or other educational institution within India for full-time education of maximum 2 children. So I'll just put a mark saying it's important. So wherever I say important, that is something that you have to be really good with, because on these points only examiner will be asking questions, and you might probably expect question on this. So it has to be within India. Like if you are if your kid is studying in any college or from distance education from some London or some other country, no, it is not eligible. Within India only, it should be full time, again no part time, no distance, and maximum 2 children only for 2 kids you educate, and remaining you don't educate. That is the meaning of it. But it is available only for 2 kids within India, and it should be full-time education only. Okay, but if at all you pay anything, something like a development fees or a donation or any other name like that, it is not eligible. So if you generally, if you go to school, I mean, like if you are having any kids at your home, like your niece or anybody like that, nephew, when you go to school, no, they will have a list of things. Of that, only the tuition fees is eligible. Donation fees, this fees, that fees, all fees they will put it. No, that is not, all are not eligible. So you have to specifically say that you mention it as a tuition fees, then only that will be eligible under 80C. Okay, so repayment of housing loan, this is also absolutely important, guys. So whenever I'm saying important, you just have to be good with practically also, and for examination point of view also. And I'll just go to your income from house property chapter. There is something called 24A and there is something called 24B. 24A is standard deduction 30% of NAV. That 24B is your interest portion, right? So if you are taking a loan, home loan, and constructing a building, or you are taking a loan and buying a house, whatever the case, you pay interest portion, you pay principal portion, right? So interest portion you will claim it under 24B. Principal portion you will claim it under 80C. I'll repeat, like few people don't know this. I mean, in reality I'm saying, and they don't claim it. So this is something to be claimed. Interest portion you will be claiming under N24B only, and principal portion you will be claiming under 80C here only. What all you can claim is repayment of housing loan, including stamp duty, registration fees and other expenses, any payment made towards the cost of purchase or construction of a new residential house property. So people think it's only principal amount. It can be your stamp duty, registration fees and other expenses, direct expenditure relating to the house. You can claim all that under 80C. And subscription to certain equity shares and debentures. So generally government notifies this, and whenever they notify, they say the lock-in period of 3 years. It's not important, just for understanding I'm telling you. And investment in 5-year term deposits. So this is also important. People take term deposits, right? So it has to be 5 years, otherwise it is not eligible. And you invest in NABARD, you can invest in senior citizen savings scheme, investment in 5 years post office. Again, it has to be 5 years. In post office, you will have a lot of things. Don't think that everything just by investing in post office you will get it. Not like that. It has to be like mentioned clearly that it is a 5 years term period and all. So otherwise, whatever you are claiming, everything you have to pay the moment you are breaking it. Okay, so that is the reason why you should not break this deposits. And contribution to additional account of under national pension scheme. Contribution by central government employee to additional account under the NPS referred to under 80CCD for a fixed term of not less than 3 years. So this is also eligible for NPS. Contribution by central government. So central government is paying this. This also I said it, right? So when an employer is paying, that will be part of your salary, like normal section 15 May, and it will be deducted under section 80C here. Okay. And these things I will come back to it. There are something like tier 1, tier 2 investment in national pension scheme. This I'll come back once I do this 80CCD also. I'll come back to this. As for timing, I'll keep it open. Please let me know if you have any question with respect to this. You might think that I'm going fast. I'm trying to cover all the points, guys. Okay, so if you have that patience, you will understand. You will understand. Any questions so far with respect to ATC? I'll just listen to my own voice. Hello. Any questions with respect to ATC? Oh, any questions? I know a few people are watching our live stream, so I'm waiting. Anyone? No one? So if there are no questions, I'll move ahead. This question I'll leave it to you. Let's see how many of you can solve this. Mr. Bino, aged 40 years, he has earned a lottery income of 1,30,000 gross. During the previous year 2022 to 23, he has interest on fixed deposit of 35,000. He invested an amount of 20,000 in the public provident fund and 34,000 in 5-year term deposits. So this is eligible under section 80C, and public provident fund is also eligible for 80C. What is the total income of Bino? Okay, so he's having an interest of 35,000, so that is taxable under income from other source, and is having a lottery income of 1,30,000, so total 1,65,000. Under 80C is having two incomes, one is 20,000 PPF and one is 34,000 term deposits. Put together it is 35,000. So 35,000, sorry, put together it is I'm sorry, mathematics so weak, 54,000, but we cannot deduct 54,000 from 1,65,000. 1,65,000 minus 54,000, you will not do it. The reason is income from lottery, section 35 194B, you might have remembered this, yesterday only we have done. That is a special rate, 30%. If it is exceeding 10,000, 30% flat rate. So if any section is talking you to pay tax at a flat rate, you cannot use ATC deductions to reduce the amount. Put it other way, is having a lottery income of 1,30,000, right? So 1,30,000 has to be taxed at 30%, nothing. So other than that, is having a fixed deposit of 35,000 income, right? Only from 35,000 only he can do whatever the ATC deductions he wants to do. But ATC cannot be taken to reduce your specified rate of income. So that is the reason why even though it is 54,000, you can claim only 35,000. So since nobody is answering anything, I am moving it further. Deductions in respect of contribution to certain pension fund. So ATC is all about your investments, investments or expenditures or some expenditure relating to kids, all of that sort, right? Now ATCC is for a pension. So ATCC they are saying if you are taking anything from LIC or any other things, you can claim it under this section. Maximum allowed is 1.5 lakh. ATC also the maximum is 1.5 lakh. ATCCC also maximum allowed is 1.5 lakh. Okay, so then you have something called deductions in respect of contribution to pension scheme notified by central government, ATCCD. So this is the most trickiest section of all the sections that we have. Pay maximum attention because you have ATCCD1, ATCCD1B, ATCCD2. So there are three sections. So ATCCD1 will come under ATCCE. Sir, what are you trying to say? So ATC 80CCC, 80C is all your investment, that's what we have discussed. 80C is your pension, 80CCD also pension, right? So 80CCD also pension by certain people. Here you can claim 1.5 lakh, here you can claim 1.5 lakh, here you can claim 1.5 lakh, but put together all the maximum should not exceed 1.5 lakh, that is given by 80CCE. So 80CCE is giving a restriction of the amount of the deductions that you will take it from 80C, 80CCD, 80CCC, 80CCD, right? So now the question is, you have 80CCD 1, 80CCD 1B, 80CCD 2. So 80CCD 1 is within the purview of this 80CCE, and this 80CCD 1B and 80CCD 2, these two are outside. Outside ka matlab you will claim 1.5 lakh plus here there is a 50,000, and here also there is a limit of 10% or 14% depending upon some conditions, like if you are government employee 14% of salary, if you are normal employee 10% of salary. So these two are outside the limit of 1.5 lakh. I know it is very confusing, I'll repeat one more time. 80CCE is a section, is like a stopping section. That section is saying deductions under section 80C and 80CCC and 80CCD should not exceed 1.5 lakh. So when I say 80CCD, there are three elements. One is 80CCD 1, 80CCD 1B, 80CCD 2. So 80CCD 1 is within the scope of this 80CCE, which means that this will go and sit under 80CCE only. But 80CCD 1B and 80CCD 2, these two are outside 1.5 lakh. So you can claim 1.5 lakh here plus 50,000 here plus whatever the amount that will comes here. So these three you can do it, and this is also not automatic. If it has to be planned properly. It's just like a tax planning. So if you are having some contribution, first you can take 50,000 here, remaining you can exhaust it from 80CC so that you can have any other deduction. So it's more of a tax planning. For time being, for examination point of view, these sections are important for us. Yeah. So again, there is one amendment or one recent addition here. 80CCD provides deduction in respect of contribution made to the pension scheme notified by the central government. Recently, they have added Atal Pension Yojana, or new pension scheme also people call it. So be whatever you call it, that will be coming under 80CCD. 80CCD 1 provides a deduction for the amount paid or deposited by an employee in his pension account subjected to a maximum of 10% of a salary. If he is a self-employed, it is 20% gross total income. So I'll slow it down my explanation now. See, now I am working for a company, I am receiving salary. So I have other things like PF me I can contribute, ATC me I can contribute, but that is only till the time I am working. When I get the salary, I will work, I will enjoy my life and I can live my life properly. But what happens if I retire and I don't have any revenue, right? So for that purpose, government pushes me to make some investment for pension funds or pension schemes, so that when I get retired, I don't become burden to anyone. I have my own rate of my own set of income, so that I can use those income. Okay. So now coming to the point, if I am working for a company, which means that I am receiving a salary, right? So I can make a pension contribution of 10% of salary. So 10% of salary bole to basic pay plus DA if it is forming part of your retirement benefits. You know that condition, right? So 10% of salary tak I can make a contribution to pension funds to save my tax. But since now at the moment I am not working for any company, okay? So I am a self-employed, I am doing my own business. So now see, for self-employed also, they also require pension, right? It's not that we will have health till the time we die. Some point of time we will also get retired, right? So for self-employed people also, they can make a contribution to pension funds like Atal Pension Yojana. For them it is 20% of gross total income. You know what is gross total income? So that gross total income at 20% maximum tak I can make a contribution to pension fund. So that is your 80CCD 1. I'm repeating, 80CCC is like everything normal that is coming under 1.5 lakh. So there is no point you are using, because once you take one insurance policy, once you have kids and you are amount on there to or you have a home loan and you are repaying, it will be done there only. ATC only will have more than 1.5 lakhs. So there is no question of that you are coming to ATCCC. So that is the reason why you have this section ATCCD1. So here also you can life insurance, you can go for a pension fund. If you are a self-employed, 10% of your salary, that is the maximum limit, or actual whichever is lower, or if you are a self-employed, 20% of the gross total income you can claim it. And there is one more section ATCCD1B, so which means that this is outside the scope of ATCCE, which means this 50,000 maximum they have given additionally. See, people are shouting, right? See, for ATC also you are given 1.5, ATCCC also you are given 1.5, ATCCD1 also you are given 1.5, all put together 1.5. So where do I have a scope to invest for pension? So for them, to encourage them to invest, ATCCD1B is coming into picture, and this is allowing you to make a pension contribution of 50,000 extra in national pension scheme. Okay, so that is outside your ATCCE. I am repeating multiple times so that you get used to that. And ATCCD, contribution made by the central government and or state government. So this is an amendment, guys. Earlier central government, now they have included state government also. This is the latest amendment. Contribution made by central government or state government or any other employer in the previous year to the state account of the employee is allowed as a deduction in computation of the total income of the assessee. The entire employer's contribution would be included in the income of the salary. However, deduction under section 80 CCD2 would be restricted to 14% of salary in case of a government employee and 10% of a salary in case of other employees. Again, I am saying if my employer is contributing on my behalf of, there is the employer-employee relationship. You go back to your section 15, any amount paid or is accrued due to employer-employee relationship, it should be chargeable under the head salary. We have studied there, right? Charging section. Like that, my employer is contributing on my behalf of. So whenever is contributing in my behalf of, that will be taxable as my salary. But ATCCD2 may, I can claim it up to 10% if it is like normal private employees, or 14% if they are a government. So any questions with respect to these guys, I am open to answer anything. ATC, ATCCC, ATCCD1, ATCCD1B. This is very important. I am okay to explain one more time also, but I don't want you to make the mistake. Any question, anyone? Any question, anyone? Nobody is asking questions. Okay. Okay. Or is it so confusing that you just lost everything? ATCCD1 na? ATCCD1 is you are taking pension for yourself out of your own money. Means whatever the money has been given to you, that is all taxable salary. From your own money, you are thinking of your old age and you are getting scared and you want to start one pension scheme or pension policy for yourself. So if you want to do that, you can go ahead and do it in 180CCD may, like Atal pension scheme or new pension scheme, or they have different names, but 80CCD may, whatever they call it. If you are an employee, you can contribute 10% of your salary you can contribute in the pension scheme. If you are a self-employed or what you call it, self-employed person, you can contribute 20% of the gross total income to that fund. So that is ATCCD1, and ATCCD1 will come under ATCCE, which means ATC, ATCCC, ATCCD1 all put together should not exceed 1.5 lakh. You can expect a numerical question on this. I am kind of, see, there could be n number of questions institute may come up with, but this logic has to be clear. ATCCD1 is pension you are contributing out of your own money. ATCCD1B, yeah, so 1B, when, so this is again additional 50,000, like that amount is not sufficient, bolke you are contributing more. So that is 80 CCD 1B, and this is outside 1.5 lakh limit. The threshold limit is there, no? That 1.5 lakh limit, say this is outside. 80 CCD 2 is when the government or the employer is giving it to you. If it is given by the employer, it will be included in your salary first, section 15 के हिसाब से, and you will get the deduction under here. Okay, but if you are a government employee, it is 14%, otherwise it is 10%. So Manikanta, Jagapati, Babu, Sai Kiran. Okay, so any questions out of the people that you are asking? See, this point, this explanation requires more time. Yeah, so I hope it is clear to everyone. Now I can move ahead. Yeah, so the next point is deemed income. So deemed ka matlab, I told you to invest in certain funds, certain instruments having 5 years or something like that, right? But if you withdraw in between, something like that, the moment you withdraw, it will be taxable in the year in which you are kind of violating the condition. The amount standing to the credit of the assessee in the pension account, okay, this is relating to pension account, and accretion to such account shall be taxed as income in the year in which such account is received by the assessee or his nominee on closure of the account, opting out of the said scheme, or receipt of pension from the annuity purchased or taken on such closure or opting out, which means that you are 80 CCD 1 के हिसाब से you are contributed, or whatever 80 CCD के हिसाब से you are contributed in a pension scheme. So there, what all possibilities can happen? That person can die. So you will close the account. I mean, that person will close the account, and their family members will take it, or he will stop making investment to go for another fund, maybe LIC fund. He can go with that, or he will start withdrawing from that money as a pension, because the main intention of contributing to those funds, national pension scheme or Atal Yojana scheme, this main intention is to withdraw when you become certain age, right? When you cannot earn on your own. So there are 3 possibilities are there: closure of accounts, death, on opting out of the said scheme, like you want to have another scheme which is more lucrative to you, or you are started withdrawing money from that. Okay, so if it is a death of the person, it shall not be deemed to be the income of the nominee. So when it is a death, so when it's a death, bole to the person who has taken this policies has died, maybe his or her spouse or kids will take the money, right? So it is a ancestral property. What you call this? Inheritance property. So inheritance properties, you will not pay tax. So if it was, if the person himself is withdrawing, it is taxable. But if he is dead and family members are taking the money, I am so sorry to say this, it is not taxable. Maybe it should have been other way. Okay, so my view. Yeah. Section 10(12)(a) provides that any payment from National Pension Scheme Trust to an assessee on account of closure of his closure or opting out of the scheme and going to another scheme, to the extent it does not exceed 60% of the total amount payable to him at the time of closure or is opting out of the scheme, shall be exempt. So you remember this composite income of agricultural. So when you are doing that agricultural little and again business, 60% is agricultural, only 40% you will pay tax. In basic concepts we discuss. In case if you come up with that video, I will discuss more into it. So out of the total income, you will segregate this as a 60% is your agricultural income and remaining 40 is your business income. Same way, when this person is closing that policy or that account and opening another account with someone else, or whatever the reason, he is surviving, he is not dead. So he is opening another thing. So 60% will be exempt, and remaining 40% only will pay. So in examination you can expect this question, like maybe in 1 mark or somewhere of it. So an assessee has withdrawn this much amount of this policy, like 10 lakhs he has withdrawn and going for another policy or something like that. So you can say that 6 lakhs is not taxable, exempt, remaining 4 lakhs ke upar, that will become his income from other source, and other calculations will continue. There is no question about it, but 60% will be not taxable or exempt, you can say it. Exemption on payment from National Pension Scheme Trust to an employee on partial withdrawal. So if you are partially withdrawing, not like complete withdrawal, only partially you are withdrawing, 20% of the contribution will be 20% of the contribution will be exempt, remaining 75% will be taxable. So this is also important from the examination point of view. So you can understand the difference between these two. Here it is, he is taking completely, like is closing the account and opting out of the schemes, like 100% of the amount is withdrawing it. Here is just partially withdrawing, like little money only is withdrawing. So whatever is the withdrawing, 75% is not taxable, remaining amount will be taxable. So limit this I also already explained, so I don't want to spend time on this. ATCCE, ATC, ATCCC, ATCCD1 will come under ATCCE with a maximum limit cap of 1.5 lakh rupees. So here this is giving you the better picture. If anybody, I mean, anyway, you'll be sharing this PDF and this is there in your book also. I'm not saying this PDF is like in something new. It is same, but just I arranged it in a way that it is easy for us to revise. Okay. So ATC में 1.5 lakh, ATCCC में 1.5 lakh, ATCCD1 में 10% of salary or 20% of gross total income. It's a pension thing. ATCCE में all three should not exceed 1.5 lakh. ATCCD1B and ATCCD2, these are two outside the scope. National pension scheme में 50,000 extra you can claim it. Here ATCCD2 में 14% of the salary if you happen to be a government, central government and state government also there is an amendment. And if you are other than a government employee, 10% of the salary is the maximum amount. And salary includes basic pay plus DA if it is forming part of your retirement benefits. Okay. So there is one question. Shall we solve this question? Is anybody having any questions? Because these kind of a questions you will get in the examination. So I would be solving this. Let's see how many of you are like kind of okay to solve or having any issues. So try to participate, guys. Nothing wrong in participating. Nobody is going to see this chat box later. Okay. Shall we start this question? You will get 5 marks for this. Any questions? Shall we start this question or shall we go to the next provision directly? Anyone would like to say on this? So continue with the questions. Okay. So we'll do this question. The basic salary of a person is 1 lakh per month. A very good person. So per year, per annum, he is getting 12 lakh rupees. He is entitled to dearness allowances, which is 40% of basic. So 12 lakh plus 40%. 40% is he is getting as a DA. 50% of the dearness allowance forming part of the retirement benefits. So not here 40% of the basic is DA, but not entire amount is forming part of retirement benefits, only 50%. So what are the DA that you get? Usme se 50% only you should take into consideration for your calculations. Both Mr. Arjun and employer contribute 15% basic salary to the pension scheme referred to in section 80 CCD. Examine the tax treatment in respect of such contributions. I will close this answer. So I will wait for your answer, guys. As I said, the reason I am shouting so much is that the concept has to be very clear. Okay, 100% accuracy we should get it. I'll give you 2 minutes of break, for my throat. If you can come up with an answer, that's fine. If you cannot come up with an answer, I will solve it. So within 1 minute, maximum 9-7 tak you tell me. Take your book, take your calculator, do it. Just tell me under which section how much you'll claim it. Under, like, you have ATCCD1, ATCCD1B. So ATCCD1 mein how much you'll take, ATCCD1B mein how much it will take. So you might get a 4-mark question on this. Like out of a bigger question, this could be a part of it. So it's a break for me, 2 minutes of time. Let's just take it as a challenge, guys. So we'll see. I will also do it, but I'll not write anything. Okay, so anybody with the answer? See, that actually gives me a lot of confidence, guys. If you can answer the questions, no, somewhere it just makes the session more interesting. So the reason why we are not recording the session and uploading, some people are putting in the comment also, recording is better than this, because you will not solve anything there, just listen. But here you will solve and you will know how to apply it also. Anyone? Nobody, yeah? Okay. Basic pay is 1 lakh multiplied by 12, the basic pay, and 50% is a DNA. %40, 4,80,000. Okay, and 4,80,000 may is eligible for only 50%. So I will write it separately. 4,80,000, but only 50% is eligible under like provided in the terms of the conditions. So only 4 lakh only will get it. So 14,40,000 is the salary for the purpose of your ATCCD. Okay, so this is a salary for your ATCCD. So what I said, ATCCD 1 में you can claim 10% of your salary. So 10% बोले तो 10% of 14,40,000. So you can claim 1,44,000. But how much his employer is contributing? 15% of the basic salary he is contributing, right? So 15% of the basic बोले तो 12 lakh, 15% multiplied by 15%. So 1,80,000 he is contributing. 1,80,000 में 1,44,000 you can claim it under ATCCD 1, and remaining 36,000 you can claim it under ATCCD 1B, because the maximum limit here is 50,000. So he can claim 36,000 here, or put it other way, he can claim 50,000 here, and he can claim 1,30,000 here. So both are permissible as per his tax planning, but for an examination point of view, you can say this. So I will see the answer. Yeah, 1.44 for ATCCD 1, 36,000 ATCCD 1B. Any question to anyone? Guys, my challenge is to complete the entire chapter. So you also have to be a little bit proactive and doing it fastly. Okay. So and later people say that the session is going too lengthy and I'm not able to cover. Okay. Anybody? Clear? Okay. So now again this question, one more question I will solve. Gross total income of this person is 9 lakh. He has made the following investments in this year. Contribution to PPF 1,30,000. Payment of tuition fees of Sunrise School, Mumbai for education of his son studying in class 10, 95,000. Repayment of house loan taken for Canara Bank 30,000. Contribution to approved pension fund of LIC this much. Compute the eligible deduction under the chapter 6A. So I will just hold on for a minute. That's it, nothing else. Tell me how much is eligible under ATC. How much is eligible pension, no? ATCCC or whatever the section. I'm just giving you a rough idea. Tell me the amount. That's it. So just to show that you are understanding, guys. I want to see whether you are understanding or not. That makes me happy. Just ATC you put down the number, and any other section if it is there, that section you put the amount. I'm just putting ATC. ATC Jacob section also you put, no? ATC is for 1.5 lakh. Okay. What is ATCCC? ATCCC you can claim it how much? 30,000. But again we have our for ATCC, you know, that section saying maximum it can be 1.5 lakh only. Okay, just a MCQ question you can expect. Yeah, so that's all about ATC. That's such a lengthy session. I hope I have given justice in explaining you properly. I hope I sincerely made my effort to that, and we'll come back to ATD, that is for your health insurance. So how to remember? Yesterday we have done TDS chapter, right? Whoever was there in the live, 194D, no, 194DA. So D बोले तो that is all your health insurance there also. Like health insurance के लिए 194D was there. Here also D is like your all health insurance will come under 80D. So 194D, 80D. In case if somehow you miss it, you can remember any one and pick it up the other one. Yeah. So in case of individual and HUF, you will claim this 80D. So how much you can claim it? A deduction to the extent of 25,000. For me, I will tell an example of myself practically. For me, I can claim 25,000. Me, my spouse, my kids, all three one category. My parents another category. So me, my partner or spouse and the kids, if anyone is a senior citizen, it is 50,000. Okay, so 25,000 separately for me and my parents, assuming that they are not senior citizens. So 25,000 for this bracket, like me, spouse and kids, 25,000, and for parents 25,000. So pura I can claim 50,000 maximum, assuming that my parents are senior citizens. So 25,000 for this bracket, me, spouse and kids, 50,000 for my parents because they are senior citizens. So total 75,000. So there's a possibility it can be 25 only, a person who is not having parents, or 25 plus 25, 50, or there's a possibility 25 plus 50, 75. There is a possibility that I am also senior citizen and my parent is also senior citizen. It can be 1 lakh also. So anything is possible, and everything has to be paid other than by cash except presumptive health checkup. Okay, we are not sure whether something is happening or not, just like your medical or what you can say it body checkup kind of a thing. Up to 5,000 you can incur in cash maximum. That's it. Out of all the three, maximum 5,000 only you can incur in cash. Remaining all you have to pay otherwise than by cash. Okay, and one more thing for parents, generally, I mean, not just parents, if they are like senior citizens and the age is of a certain age, no, insurance companies don't come forward to provide any insurance to them because they know that person will, you know, fall sick so too often and there is a so much of outflow for them. So insurance companies are also cunning. Okay, don't think that they are doing best for us. So they will give insurance policies like for us normal people. So how often we get into health issues? Generally, no, except that COVID related. Generally, out of 1,000, maybe 1 or 2 people will get sick. That's it. Everybody will be okay only. So they will offer it a reasonable price and a less price for us. But for senior citizens, they don't. So coming to the point, for a senior citizens, when they are not able to get insurance from LIC or any other insurers, that policy, that amount, no, that 50,000, that is given to them on a actual basis. Video struck ka? Okay, I'm into different world. I forgot everything. Let's see. Technical issues are so many these days. Can someone tell me if it is fine now? Is it fine now? I can see it is fine. Okay, so these gadgets we cannot blindly trust. Okay, blur is there. Huh? They work wonders sometimes, then they give troubles. Is it really buffering or anything like that? Please check your internet also. Fine, huh? Okay. Okay, so the point I was trying to make is health insurance 80D we are discussing. Yeah, health insurance we are discussing. If any insurance company is not coming forward to give any insurance to a senior citizen, that 50,000 limit I said no, that 50,000 limit can be paid in cash also. It's fine. Only for a senior citizen parent. I mean, like whoever is senior citizen, it is available for them. Otherwise, you have to take an insurance policy. Only for a senior citizen, you can negate the taking of a policy by incurring the amount in cash, but everything has to be given as a proof. You need to have a proof of that. Okay. So quantum of checkup I told 50,000 if it is a senior citizen, otherwise it is 25,000. But senior citizens ke liye in examination you can expect this question. They have to be resident in India. Sir, how come it is different? Assuming that my parent, okay, my mom and dad, they are staying in US. Okay, all hypothetication, that is not the case. US, I am only staying here. So I took a health insurance policy on my parent, mom or dad. So they are senior citizens. Even though they are senior citizens, I cannot claim 50,000. I can claim only 25,000 because they are not resident. That higher limit is given only for a resident. So just remember, in examination, deliberately they put a question that Mr. X, who is a citizen of India, is paying life insurance on himself. Along with that, is also paying for his dad or mom who is staying in Canada and whose age is 70 years, like that. So we think that 50,000 is allowed. No, it is not 50,000. They are not residents, they are non-residents. So only 25,000 is allowed, not 50,000. And for preventive health checkup ke liye, you can incur 5,000 for all, for me, my spouse, the kids and family, everybody put together. Only 5,000 can be paid in cash. So somebody wants to save tax, generally what they do is they show this 5,000 as a preventive health checkup, and which generally no need to publish, no need to show any document on that, because it is law itself is saying 5,000 you can incur in cash. And there is one question nowadays, insurance companies are coming up with a lot of good plans. What they are saying is, Sampath, you pay me now only, and this insurance, this life insurance will be covered for next to 10 years. So I am making the payment once, assuming 5 lakh rupees, assuming, but the benefit I will get for next to 10 years. So I might be okay, 10 years bole to by that time I will be like in 40, 45. So better I'll take it now only, bolke I am taking that policy. But lump sum amount, right? So should everything be allowed once, or should it be apportioned? The answer is it should be apportioned over the period for which the policy is in force. Okay, you have to see for which financial year it is in force. You have to do it by divided by 10, like if it is for 10 years, and accordingly you will be claiming the deduction. Even though you make the payment once, you can take it subsequent years also. For HU of any member ke liye, you can take that. There is one question, again this is an important, so that is the reason why 80C and 80U may I am asking you to solve the problems. And this also, if I'm not asking whether you have any doubt or not, I'm just directly going to read this, and everybody has to tell me what is the amount he is eligible for 80D. Then that gives me confidence that you are understanding. Okay, and I'll give you 2 minutes of time. Mr. Ravi aged 45 years, so he is not a senior citizen. Paid medical insurance premium of 22,000 during this period to ensure his health as well as health of his spouse. His spouse. He also paid medical insurance premium of 47,000 during the period to ensure the health of his father aged 65 years. 65 बोले तो you think what he is, who is not dependent on him. So there is a question, should a parent be dependent on you? Not required. For father you can take at least health insurance, right? That is the minimum common sense in India. So not necessary he should be dependent on you. Without dependency also you can take insurance on your father or parent. He contributed 4,600 to central government health scheme during the year. He also incurred 3,000 in cash on preventive health checkup for himself and his spouse, and 4,500 by check to on preventive health checkup of his father. Compute the deductions allowable under section 80D for assessment year 23-24. See, this is a challenge, guys. Just accept the challenge, okay? So it's like challenge. It's not like he will do it. Don't think like that. You take the challenge and tell me how much is eligible under 80D for self and spouse and for father. Self how much total, how much you'll claim it. So this can be one of the part in your salary head, guys. Okay. So if you want a good practice of numbers, please do it. And some people might feel bored while solving this problem, but I firmly believe unless we solve questions in DT and IDT, there is no point in just revising the provisions. Okay, I totally believe in that. So that is the reason why I always come up with some illustrations from institute material only, but I come up with an illustrations because important illustrations. Let me know what is 80D for self and spouse. What is it for his dad? Illustration 7. Yes. 2 minutes. I will give it time. Now it is 24, right? By 26 you should give the answer. Accept the challenge, guys. Whoever is watching, be serious about your exam and do it. Just by commenting, nothing will go for you, nothing will come for me. Okay. Self के लिए 25,000. Sai Kiran. Okay. Okay. Jagapati Babu. Correct. Self 25. Father 50. Okay. So 3 people have answered. Any other contrary answers can we get? Anybody from any contrary answers? Father 50. Jagapati Babu. Okay. So 3 people have answered, so I'm okay, fine. Father 51,500. Sai Kiran, just remember our provision. Maximum for self, spouse, kid is 25. Maximum for parent is 50. Okay. And don't feel bad if it is wrong. I'm saying it is a welcome that you are answering it so that you know where you are making a mistake. Our purpose of the session is to know where we are standing. Okay. Okay, fine. So we are going to the next one, and I'm happy that you people have answered. We have one more question. This also try to answer. You apply all the provision. Mr. Yatin, aged 48 years, paid medical insurance premium of 23,000 during the period to ensure his health as well as health of his spouse and dependent children. He also paid medical insurance premium of 35,000 during the year to ensure the health of his mother, 71 years, who is not dependent on him. He incurred medical expenditure of 24,000 on his father, aged 78 years, who is not covered under the mediclaim policy. I said for senior citizen, if there is no mediclaim, this is 78 years, but generally companies don't come forward to provide any insurance. So he's directly going with the expenditure only. His father is also not depending upon him. He contributed 6,500 to central government health scheme during the year. Compute the deduction allowable under section 80D for the assessment year 23 to 24. I just want what is he is eligible under 80D for self and for self, self, spouse, kids, all one bracket, and for parents, just the total amount. Okay. Again, 1 minute of time. It's like a really fun also. It's fun at the same time. It is a test of our knowledge. I'll see how many are there on the live. How many there on the live? Parents 50, okay. One answer I got it. So everybody do it. Don't get deviated by the others' answers. It's okay. Like whatever the answers, they are their answers. Because in examination we write ourselves, right? Cell for 23 Sai Kiran, cell for 25 Jagapati Babu. So there is a contradictory answer. I'm not saying which one is right because I don't know what is the right answer. I have not checked the answer and I'm not thinking of what is the answer. Let's wait for some more time. Some people are answering right, so keep answering it. We'll see. Illustration 8 mein what is the answer? See, contrary answer we got it from Sai Kiran. Why 23 for self Sai Kiran? 23 he paid it for himself and is what do you call? His spouse, and he also paid one second 14 years. Okay. Yeah. So correct. Correct. So 23,000 he paid for himself and his spouse, plus this policy has taken no 6,500 to central government scheme. So 23,000 he can take it in his bracket because that is still vacant. Still the benefit is still there, right? So 6,500 you add it to the self only because parent ke liye, though you how much you have incurred 24,000 for father and for mother. Okay, 35,000 for mother and 24 for father. So maximum you will get only 50,000 here. So there is no point in including here. So you will take it here only, but the maximum is maximum 25,000, right? So 25k for self and 50k for parent. So somebody has already given the answer. Okay, good. So that's it, guys. I mean, it increases your confidence levels. So now, so far what we have done is, okay, good. So far what we have done is ATC, ATCCC, ATCCC, ATCCD, and అందులో 1, 1B, 2, CCE, and then we have done ATD, health insurance, and ATDT is a disabled dependent. Okay, ATD is for your family, self, spouse, kids, parents. You know the rules also 25, 50, 5,000 preventive. Now ATDT is like there is a dependent disabled person, on for that person you are incurring some expenditure. So ATDT provides that who is a resident in India, what is the qualifying amount incurred for medical treatment including nursing training, rehabilitation of a dependent being a person with a disability. If someone is it's okay, guys. Like if someone sit in if see, I already mentioned in the thumbnail and everywhere that we will be conducting in English, but if any point is still not clear, then I will explain in Telugu, but we'll try to cover up in English only. Hope you'll understand, because we said it early on the start of the session that the sessions will be in English, but it doesn't mean that I am not going to take in Telugu. If any point is not clear for you and you feel that I should explain something in Telugu, I'm always there to explain in Telugu, as that is our my language as your language. Yeah. So coming back to this, if there is any disabled person, if there is any disabled person on which you are incurring an expenditure for nursing, training, rehabilitation of a dependent person, paid or deposited under a scheme framed on this behalf with the life insurance corporation or any other insurer or the administrator of the specified companies. Put it simply, they are not telling you that you should take insurance policy only. If there is a disabled dependent, if there is someone who is giving you policy, you take it, well and good. But if there is nobody to give any policy or you don't want to take any policy, you can directly incur the expenditure for nursing, training and rehabilitation. The deduction will be 75,000 and 25,000. This is a flat, which means that you might incur only 5,000 rupees, but still you can claim 75,000 if you are maintaining and incurring expenditure for a disabled dependent. If they are suffering with a severe disability, like where the disability is 80% or more, which is prescribed by the medical norms, and they will be giving in the certificate itself like what is the percentage of disability that they have. So what will be the case? It will be 1,25,000. Okay, so maybe in articleship you come across this. When someone wants to claim this this benefit, no, so they have to get a certificate from the doctor. I mean, generally some specified doctors, they will be giving this certificate. That certificate we have to submit, like you have to mention that while filing the return of income. So there is no need of actually showing how much you have incurred. It's just that you are maintaining a disabled person and who are and who are suffering from a disability. Just that the certificate has to be produced, and the certificate only the doctor's signature will be there, plus what is the severity that they are suffering with also will be there. Okay, so 75,000, 25,000 is something that you have to mug up and you have to remember in examination. And conditions I told, certificate you have to furnish. So this example I will give it to you. Let's see how many of you can solve it. I know around 10 people are there on live. Mr. Mohan is a resident individual. He deposits a sum of 60,000 with the life insurance corporation every year for the maintenance of his disabled grandfather, who is wholly dependent upon him. The disability is one which comes under the Persons with the Disabilities Equal Opportunities Protection of Rights and Full Participation Act 1995. A copy of the certificate from the medical authorities submitted. Compute the amount of deduction available under section 80 DD. The question is very simple. Maybe in MCQs you might get 1 or 2 marks on this. This person, what is he doing is, he is depositing 60,000 for the with the LIC, who is on the maintenance of his grandfather, and his certificate is furnishing the certificate also. Everything is in order. Now the bits mein you will get how much he will eligible, 60,000 because he has incurred 60,000, or 75,000, or it is 1,25,000, or it is nil, 1 or 2 marks. Let's see how many of you will give the answer. 75, Jacob. Anyone else? See, try to participate, guys. This is like a fun, and you will remember, like when answer comes a little late, no, you keep thinking, so you are thinking whatever you call it in brain, that will be activated. In examination, there is no point that you will forget it. If you directly give the answer, like possibility that you will forget it. Give me the answer, whoever is watching. So Jacob, by the time you end up with this direct tax sessions, we'll make sure that you also learn Telugu. Okay. It's okay, no need to sorry, it's fine. It's fine. So can anyone give the answer for this? Okay, absolutely right, Jagapati Babu. Full marks goes to him. Nil will be the right answer, because your relatives may grandfather will not be covered, only the father will be covered. Okay, family, I mean like spouse, kids, mother, father, that's it only, not beyond that. Okay, so it is nil as he has given the answer. So next we'll go to the next one. deductions in hey, what happened to that extra wala highlighter? Yeah, deductions in respect of medical treatment 80 DDB. I will be repeating it multiple times so that by the end of the session it will be in your hand. 80C all life insurance, 80D all health insurance, 80DD dependent disabled dependent DD. 80DDB is for, this is also relating to health only. So anything that falls into D bracket is health only, but it is an ailment. Okay, so ailments will be covered here. This section provides deductions to an assessee who is resident in India, being an individual or HUF. Again, this is for resident. We are all partial guess. We will only give it to Indians only. And the qualifying amount is, if it's a normal person, 40,000. If it's specified diseases, we need not to mug up. Even I also don't remember. We have to go and check it in practice. If someone comes like, I'm trying to claim it under 80 DDB, so I got a certificate from my doctor, like someone has given me, can I claim it under 80? I mean, they don't say that 80 DDB, they just say that, can I get any, someone is like this, you can ask your daughter to submit the document on I mean like certificate. On the basis of certificate, you will kind of give that 1 lakh or 40,000. But in examination perspective, 40,000, 1 lakh, 40,000 for normal people, 1 lakh is for senior citizen. Just remember that. Remaining anything else is not required, because you get the certificate from neurologist or oncologist or urologist, science I'm not sure, hematologist, immunologist, all ist, whatever comes. So as whatever is prescribed by the government, all those doctors, they have to give the certificate that you have to submit it to the CBDT. Yeah, so that is your 80D. So 80C, 80D, 80DD, 80DDB. I'm not telling what the section, but by now you might be clear with this. So 80DDB tak we are done with this. Now we are going to 80E. So E is all interest family. Remember like this. D all health family. C all investment family. D is health. E is anything that comes with E, E, EE, EEA, EEAB, all relating to interest portion only. Okay. So 80E is for deductions in respect of interest on loan taken for higher education. Otherwise, remembering it is that E bole to education. On education, you are taking a loan on which you are paying interest, that you will claim it here. Okay, I'll repeat in case if has that tendency to forget something. E is for education. So not education that you are paying under 80C. 80C is your tuition fees. 80E is you are taking a loan and going for an education, higher education, and if you are happen to pay any interest on that, you will claim it here. Section 80E provides deduction to an individual assessee in respect of any interest on loan paid by him in the previous year out of the income chargeable to tax. The condition is that loan must have been taken for the purpose of pursuing higher education. It is for higher education, but nowadays the fees are so high that for school kids also you have to take an you have to take a loan. That much is the that much is the cost of education at the moment. But for this section 80E ke liye, it has to be higher education or for the purpose of higher education of his or her relatives. It can be for you or it can be for your relatives. Okay. The loan must have been taken from any financial institution, approved charitable institutions. Some people ask me this question multiple times. This interest when you take, you have to take it from a financial institution or approved charitable institution, because that is your 80E. Now 80EE. So as I said, E is interest portion, interest family. 80EE is extension of E. Deduction for interest on loan borrowed for by individual 80IE. So you are taking a loan and constructing or buying any house or buying a house. On that you are paying interest. Sir, somewhere I have read this, you might have read this in section 24B. while calculating income from house property, if it is a self-occupied property, there is a limit of some 1.5 lakh, and if it is let out property, there is no limit. Can someone confirm what is the limit? I just lost the amount. So that was the limit, right? But if you are end up paying more interest to the bank than what is given under that section, you will be claiming it under 80EE. Okay, so 80EE is the interest portion. 24B is also interest portion, but that is a default section. But if you are paying more interest than what is allowed there, you will claim it 2 lakh. Yeah, so 2 lakh. I mean, earlier it was 1.5 lakh. They increased. I mean, long back. I'm sorry. So 2 lakhs is the limit under 24B. But if you are paying more interest than 2 lakh, assuming that you are paying 2.5, 2 lakhs you will claim it under 24B. 50,000 you will claim it under 80EE. 80E is education ke interest. 80EE is house property ke liye interest. Additional deduction in respect of interest on loan taken by an individual for acquisition of residential property from any financial institution. Conditions are very tricky conditions. Conditions should be that you should not be owning any residential house on the date of sanction of the loan. So when you are taking a loan, no, that time you should not be having any other house in your name, which means that you should be a first time buyer, and the value of the house is 50 lakhs. See, if you are staying in any metropolitan cities or maybe like good suburbs also, 50 lakh maybe you are not getting any house. I don't know in which apartment you will get it, but 50 lakhs is like, I mean, you will get it. I'm not saying you will not get it, but out of your choice you will not get it. So the value of the house should be lesser than 50 lakh, and the loan sanction should be lesser than 35 lakh, and it should have been given between 16-17. The loan should have been sanctioned between 16-17, and you should be a first time buyer, and the loan should be house property value should be less than 50 lakh, and 35 lakhs or less should be your house loan, which means that 15 lakhs you paid from your own pocket. Okay, I hope this is clear. I mean, this is between 16 and 17 long back. So you might say, sir, why are we discussing this? It is not anyway available. It is not applicable now, but the people who have purchased at that time, now 16, 17 ke beech mein, for them they continue to get this benefit till the time it is exhausted. Till the time they repay the entire loan amount, they continue to get this 50,000, 50,000. So 50,000 more than, yeah, here only, I just didn't see it. So 24B mein you will get 2 lakhs, no? This 50,000 is over and above this 24B. So now we'll go to the next one. Deductions in respect of interest payable on loan taken for acquisition of residential house property, 80EEA. Again, I'm repeating, 80E is for education interest. 80EE is house property which is bought between 16 and 17. 80EE. 80EEA is again a residential house ke liye, but it is purchased between 19 and 22. So 16, 17 bole to you are claiming it under B only. Sorry, EE. I'm sorry. And if you are purchasing between 19 and 22, you are claiming it here like EEA. The value of the stamp duty value of the house should not be more than 45 lakhs, and you should be a first time buyer, and you should be the first time buyer. You should not be taking under 80E, obviously. So when you are purchasing something in 16, 17, how can you purchase it between 19 and 22? Obviously it is not possible. There should not be any condition like this, but it's given, so I'm reading. See, how can you purchase houses for the first time between two? If you're already purchasing there and you're selling and again purchasing, if you already avail this, you are not eligible for 80EEA. Okay, so Somesh, I'm fine, thank you. So I hope it is clear now. This person will get 1.5 lakh. This is also again over and above your 24B section. So I'll just repeat it once for our practice purpose. 24B mein you are claiming that 2 lakh, okay, and 80C mein you are claiming the 1.5 lakh principal portion. 80EE mein, if it is purchased between 16 and 17, you are claiming 50,000 extra in addition to 24B, and 80EEA mein you are claiming 1.5 lakh if you are purchasing between 19 and 22. Okay, so this is your 80EEA. And 80EEB again interest family only. Deduction in respect of interest payable on loan taken for purchase of electric vehicle. So nowadays electric vehicle is a need of the hour, because we are polluting our environment so much. So government or any government is pushing electric vehicles. So even government of India is also pushing that you purchase one electric vehicle, but make sure that the vehicle is a proper vehicle. It is not bursting anywhere or not giving you any problem. But initially it will come, but over a period to be sorted out. So if you are taking any electrical vehicle, by taking a loan, purchasing any electric vehicle, again you will be given that benefit of 1.5 lakh. 80EEA may be also 1.5, 80EEB also 1.5, but the condition is that loan should be taken for purchase of an electric vehicle. Assessee should be an individual, so it's only for individual. Company cannot purchase electrical vehicle and claim it, or HUF also it is not available. Loan should be sanctioned from financial institutions or NBFCs, and loan should be sanctioned between 19 and 23. So during this period you have to purchase it, then you are eligible for 80EEB, and they will extend it also. 80BEEB 1.5 lakh. So any question with respect to these three guys? 80C, 80D, 80E, EE, EEA, EEB so far. No, right? So if there is no other thing, we'll go ahead with the 80G. Okay, so now we will go. As I said, there will be repetition of sections, so don't get annoyed. It is more likely that we remember, we stick to the sections if we are going back and back multiple times. Yeah, so 80G deductions. Deduction in respect of donations to certain funds, charitable institutions in 80G. So this is, I would say, is the most important chapter, most important section, just like your 80C, 80D. This is also very important. You need not by heart all the eligible deductions. Certain things are just by looking at them it is clear. Certain sometimes institute also gives in the examination. So there are 4 types of deductions you will be having under 80G. One is 100% eligible without limit, 100% eligible with limit, 50% eligible without limit, 50% eligible with limit. So what do you mean by with limit? With limit, so whenever there is a with limit, there is a 10% of your adjusted gross total income, we have to calculate that, and we have steps also. Couple of questions, we'll solve it, but make sure that you understand the context of it. There are 4 ways that you can do it. One is 100% no limit. No limit bolo to how much ever you contribute, no questions asked, you take everything. Next 100% with the limit. With the limit bolo to you have to do that adjusted gross total income of 10%. And again 50% no limit bolo to if you contribute 100 rupees, you will get 50% without any limit. If you contribute 1000, you will get 500. If you contribute 1 lakh, you will get 50,000, like that. Nobody asks questions. And fourth one, 50% with the limit bolo to, again that should be within the limits as they said, like we have to do the calculations. Okay, so I'll just read it once. In examination also, the day of examination, I'm repeating this point, on the day of examination, when you go to the examination hall, there are few things which you have to compulsorily look into it. Like maybe when on the day when you wake up and start your preparation, remaining things by looking at the question you will recollect it, but recollect, that time you have to be sure with this. This is something that you have to do on the day of examination also, like before going to the examination hall. 100% without limit is, I'll just run through, no need to by heart also. National defense funds, because defense is very important for us, so obviously government wants to give it like a top priority. Whichever is like top priority to the government, that is like 100% without limit. National defense, Prime Minister National Relief Fund, Prime Minister Armenia Earthquake Relief Fund, Africa some fund, National Children's Fund. Children are important for our government or India. National Foundation for Communal Harmony. So I mean, we should not say that. but sometimes in India we have this communal disturbances, right? So just to make that a harmony, if there is any fund and the fund you are contributing, like it is for good for everyone. So they would say it is 100% without limit. Upload university or educational institution of national eminence. So in universities or educational institutions, if you are contributing, like whatever is important for the government of India, 100% without limit. Chief Minister's Earthquake Relief Fund, Maharashtra. Only for Maharashtra this is given. It's not for Chief Minister Earthquake Relief Fund of, assuming some other state, it is not there. Only for that particular state, I think there was some earthquake which jeopardized a lot of lives there. So they might have given this the effect, but it is not for everyone. It's only for Maharashtra. Any fund set up by the state government of Gujarat exclusively for providing relief to the victims of Gujarat earthquake. So earthquakes just happened in Gujarat, I think in year I don't remember. So there also, for Gujarat also it's given. Jila Sakshastra Samiti for primary education in villages and towns and for literacy activities. Again, and in villages, if you are having this Jilla Sakshatra, again, if you are contributing anything, 100% without limit. National Blood Transfusion Council or any state blood transfusion council whose sole objective is to control, supervise, regulate, encouragement of operation, requirement of blood banks. So again, blood banks, you know, everywhere you find blood banks, right? So they preserve, like they take the blood from a person and they preserve, and whenever whoever is having any need, they will be giving to that person, right? So I mean, they have to be controlled by someone else. There has to be a proper body. For that body, again, see, blood is very important for lives. You can understand by now, whatever is like top priority is given 100% without limit. Any state government fund set up for providing medical relief to the poor, any army related things. Andhra Pradesh Chief Minister Cyclone Relief Fund 1996, that time there was a big cyclone, I don't know. So for that, if you are contributing anything, so states we have states, earthquake for Maharashtra we had, earthquake for Gujarat we had, and cyclone for Andhra Pradesh, our state we have. And National Illness Assistance Fund for healthy people, Chief Minister Relief Fund for so government's relief fund in respect of any state or union territory. Chief Minister Relief Fund, National Sports Fund, this is for sports, National Cultural Funds, National Fund for Technology Development, National Trust, Swachh Bharat Kosh. So this is the latest addition. So there's a possibility that this might come. So you remember, this is 100% without limit. And Clean Ganga, this is also they have taken very initiative, like very important, like we want to clean our rivers bulke. So this is also, I would say, important. Swachh Bharat, Clean Ganga, National Fund for Control of Drug Abuse. So drug abuse and narcotics, this is also becoming more prominent in some parts of country. So they are like, if you are contributing anything for that fund who kind of handles the situation of this drugs related things, this is also 100% without limit. Prime Minister Citizen Assistance and Relief in Emergency Situations Fund, PM CARES Fund. So in COVID, you might have seen lot of celebrities, they are contributing like chunk of the amounts, like crores, 5 crores, 7 crores, 10 crores, all film actors, they are contributing, no? So this is a fund which is going to PM CARES Fund, that is also 100% without any limit. If you don't mind, sir, what is the possibility to start? Indirect also we will start, guys, once we will complete this DT. Okay, so that is 100% without limit. And then we have donation qualifying for 50%. So this 100% without limit, you need not mug it up. But these are small numbers, right? This is something that you have to be really sure. I mean, you have to by heart also. Jawaharlal Nehru Memorial Trust, Prime Minister Drought Relief Fund, Indira Gandhi. See, these are all family members. You can see Jawaharlal Nehru and Indira Gandhi, Rajiv Gandhi, Prime Minister Drought Relief at that time. So this is all 50% without limit. Okay, remaining all limit. Okay, and donations qualifying for 100% deduction subject to qualifying amount. The government or any approved local authority association, as the case may be, for promotion of family planning. So family planning also important because our population is going too high, right? But it is not that important as 100% without limit. So 100% but with the limit, family planning. So in examination you can expect question on this. Olympic Association or any sports related thing, it is 100% with the limitation. And the donations, 50% donation subject to qualifying limit. One is ATG में like you have institutions funds established for charitable purpose fulfilling the conditions. Government or local authority for utilization of any charitable purpose other than the promoting family planning. Again, that is also family planning is 100% with the limit. 50% is other than family planning, any charitable purpose you are doing, that is 50% with limit. Authority constituted in India by or under any other law enacted either for the purpose of dealing with or satisfying the need of housing, accommodation or planning, development and improvement of cities. So now like cities are spreading, right? So we need proper town plans for that. So that is also one authority they are constituting, and you are contributing anything to it. That is not that important because they charge a lot of registration fees and they will have their own money set up, right? So 50% with the limit. And minority community के लिए if you are doing anything, any installation 50% with the limit. And if you are repairing anything like temples, mosque, gurudwara, church or any other place of notified things, again 50% with limit. So these things just go through once before examination, you will be good with that. Okay, so again when I say with limit, how do you calculate with limit? Pay attention guys. I know it's little bit boring, little bit dry only, but examination may we have to get 4 marks or 5 marks, right? There is no other way but to concentrate. The eligible deductions referred to in 3 and 4 should be aggregated and the sum total should be limited of 10% of adjusted gross total income. I said 100% with limit, 50% with limit, right? So whenever I say with limit, that is meaning 10% of adjusted gross total. So adjusted ka matlab, you calculate as if everything is done except ATG. So you remove the ATG and few things that they say, and that is called adjusted gross total income. So this is the first step. Compute the adjusted gross total income and deductions under chapter 6A. What do you mean by that? I am working for a company, I received 10 lakhs as a salary. So that is my gross total income. I already invested in ATC, you deduct that. I invested in deposited in ATD, remove that, I mean deduct that. Like that, except ATJ, you take care of all other sections. Okay. Short-term capital gain taxable under section 111A. You remember trading in, I mean like securities may short-term capital gain. So that also you remove it, that will be taxed separately, 15% say. Long-term capital gain 112 and 112A, that is also specified rate, that is also you remove it from your gross total income. And any income on which income is not payable, tax is not payable, like assumption you have some agricultural income on which tax is not payable, or any amount that you are receiving on for a death of a person, it is not taxable. Like that, if you have any income which is not taxable, you remove that. And then income referred to in 115A, 115AB, AC, AD, AE. So there are certain specified incomes which are taxable at a specified rate. They are all removed. See, in examination, put it very bluntly, you calculate the gross total income, you deduct all chapter 6 ATC to ATU except ATG, and you deduct anything that is taxable at a specified rate, be it short-term capital gain, long-term capital gain, ATC, 112, 112A, 115AB, AC, AD, like there are a lot of sections which are taxable at a different rate, that you remove it. Okay, then calculate 10% of that, that is the amount. Compare that with the 100% of 100% with limit or 50% with limit, that amount you will be eligible under ATD. Okay, we'll solve one question at the end. Before that we have to complete these things. Okay, so I'm not going to ask whether any doubts are there. I know this is like very dry area, so I don't want to waste your time. But what I want to do is I will complete the remaining things and we'll solve one problem relating to how do you calculate that ATG, adjusted total income. Coming to the next one, deductions in respect of rent paid, ATGG. So what is this ATGG? You might have seen in section 1013A, people claim HRA, right? Like if you are working for a company, there is the employer-employee relationship, and when the employer is paying you HRA, that will be taxable for you as a perquisite. Okay. Or monetary benefit. No, it's not a perquisite, it's not non-monetary, right? So it is taxable for you. But 1013A के हिसाब से you will claim the deduction or exemption, like rent paid in excess of 10% of salary or 40%, 50% of the salary, like that. The provisions are there, right? The same way for a person who is not an employee of any company, assuming I'm a self-employed now, I'm not getting any HRA from anyone. So people who are working are getting HRA, people who are not working, for them ATGGs. That's the only explanation I want to give. You should be paying rent, that's it. You should be paid by you. and you are not getting HRA. Obviously, see, if I'm receiving salary, I will be claiming HRA, right? I cannot claim this section. This section is only for people who are not working. So quantum of deduction, this is important for examination. You can expect a question around this. Rent paid in excess of 10% of salary. There it is 10% of salary. Here it is 10% of gross total income and 25% of such total, or 5,000 per month, whichever is. Okay, you can expect a question on this, and there is an illustration also. We will solve it. Before that, I just want to repeat once again. I was going a bit fast. Rent paid in excess of 10% of salary was the condition there. Here, rent paid in excess of your gross total income, adjusted gross total income, and then there are 40%, 50%. Here it is 25% of salary or 5,000, whichever is lowest, that will be eligible. So I'm giving you a question. Let's see how many of you can solve it. I know only few people are there. I understand it is very dry sections, but still I want to ask this question to you. You can expect this question in the examination. Let's see how many of you can solve this. Mr. Rakesh, a businessman. Businessman matlab he is not working anywhere, so HRA is not eligible. Whose total income before allowing the reduction under section 80 GG is this much, 4,60,000. Paid house rent as 12% per annum in respect of residential accommodation occupied by him at Mumbai. Compute the reduction allowable under section 80 GG. I'll give 2 minutes. Let's see how many of you can solve it. So 10, 5 tak I'll expect the answer on this 80 GG mein. GST will do once we complete the TD, income tax, direct tax case. Anyone would take up the challenge and tell me what is the amount is eligible under 80 GG? You can expect a question, guys. See, we are running over our time, but I'm very rigid in completing these portions, illustrations. I could have skipped this illustration, but the reason I'm not skipping is I want to see how you will apply this. 3 things are there. I will tell you. Let's 60,000. Okay, I got one answer from 60,000. Anybody else? Anybody else? Only one person? I don't. 7 people are there now. 60K Jagpati Babu. So 2 people. Okay, so you got it. So I don't want to explain it again when you already got it. Deductions in respect of donations for scientific research or rural development, 80 GGA. So you might correlate this with something else in PGBP. I will ask question, guys. In which section we were talking about scientific research or rural development in PGBP? Can someone see check? I mean, check balls are not like anywhere. Recollect that PGBP section. There was one particular section. I don't want to tell. I will wait for some time. People who are having PGBP income, they will claim it under that section. Section 35, that is for scientific research. For rural development, there was one more section. 35 CCD. So CCC. So people who are having PGBP income, they will contribute to scientific research and they will claim it in section 35, as you said, or 35 CCC. Okay. For people who are not having PGBP income, they also want India to grow. Why? Only companies should contribute to scientific research. Why a person like me should not contribute? So I can also contribute under 80 GGA. Okay. Whoever is not having PGBP income, they will contribute it here and no issues. And if you are paying more than 2,000 rupees, you have to pay otherwise than by cash. You remember this 40A 1A, or not 40A 1A, that is TDS. In PGB, what was the section where we were talking about payment has to be made otherwise than by cash? 40A? Can someone tell? (40B), that is payment before filing the return of income. 43B is I had to make the payment before I file the return of income. But 20,000 se zyada you should not pay in cash. You have to pay it by account pay check drawn on a person or a demand draft or any other notified like IMPS and all. 40A 1A is for TDS. All provisions that coming to your head is you are telling. 40A 3. Okay, so I'm just connecting the dots. Okay, so if you are making any payment more than 2,000 rupees, you have to pay it otherwise than by cash. So that is for your 80GGA, nothing else to discuss. Whoever is not having PGBP income and still they want to contribute to scientific research or rural development programs, they can do it under 80GGA. So next, deductions in respect of contributions by companies to political parties, 80GGB. See, political party, there was some section we were discussing in section PGBP. You will really enjoy the session. There was one section which is talking about political contribution, political donations in PGBP, which was disallowed. Company and you are contributing or your whatever you are doing for political party, it is disallowed. You remember section 37 general section mein this is disallowed. If it is anything violation of law, or if it is for political parties, if it's for CSR contribution, all these are disallowed under section 37 subsection 1. Okay, same way there it is disallowed, here it is allowed. Bola to here you will claim if you are a company. Yeah, good. If you are a company and you are making to a political party some contribution that is disallowed in PGBP, allowed here. So when you are doing final assessment problems, full problems wherein involves everything, all chapters, that time you need to have that control of different chapters. One chapter it's okay, but different chapters we have to go for forward and behind. So now back and forth you have to go. So if you are contributing to political parties, then you will claim it under 80GGB. But if you are other than a company, see this is for company, 80GGB is for company, 80GG is for other than company. Okay, both are same. Any question guys so far? See, strength is losing slowly. I am assuming that sessions are boring. Few sections I will discuss and will complete it. Okay. So GGB, GGC, GGB is for company, GGB is for company and GGC is for other than company. Political contribution if you are making, you remember in examination you might get, they will be giving in some amount, they will be debiting in their P&L account. So while you are doing PGBP head, you have to add back because that is disallowed in the PGBP. But at the same time, once you complete the gross total income and then come to GGB, there you have to deduct this as a chapter 6 year deduction. Okay, so these two it will be helpful, and these things I'm not explaining 80 IA, IB, IC. I hope we will come up some other session for this, and at a final level only it is there, not at a inter level. So for timing I'll skip that, or I'll just read the heading and you will understand slowly. Deductions in respect of profits and gains of gains from undertaking or enterprise engaged in the infrastructure development company, 80IA. So they will have 10 years tax holidays period. So 10 years of tax holiday period for them. So they will not be paying for that, and it is on or before 1st April 1995 until 31st March 2017. After this they will be claiming it under section 35 AD only. If anybody at a final level wants to understand this, I'm just going at a higher level. 10 out of 15 years they will claim it. If it is a road or toll or bridge highway projects, 10 out of 20 years means for the next 20 years they will select when they want to take this benefit. Not that once you start it continuously 10 years 15 years 10 years you have to select. Whenever you are getting more profit you select that. 20 years 20 years 10 times. सेज के लिए so 100% for 10 consecutive years it is deductions. They will not be paying tax for SEZ. I said SEZ is very important for the development of any state. If you see now all big cities like Bengaluru also, Hyderabad also, we are developing so much because we have SEZ. So we have SEZ, we have SEZ developers are there. They constructed a lot of buildings and they have given it on a rental or lease basis to so many companies. Right? So that is the reason for them 10 consecutive years there is no tax for them till 31st March 2016. But still if someone started 2016 also, they 10 years it's still applicable for some companies. And this is like your startup. This also I explained in capital gain chapter. So there is an amendment, guys. I think in the chapter I forgot that amendment. But I am repeating it now. If anybody is watching, just correct it. It was 31st March 2022. No, like the incorporation should have happened between the 1st April 2016 to 2022. They extended it to 31st March 2023. Okay, so they are extended for one more year, and remaining all I am discussing it again. For Northeast state ATIE, for them also some benefits are given. Between these two dates they should start like manufacturing or production of any article or thing, or substantial expansion of the business or eligible business. So here they are given what you mean by eligible articles. So any article, but that should not be that should not be a tobacco, that should not be a tobacco substitute or pan masala. This is why are you saying this is the development of economy? This is not a, this is spoiling the economy. Okay, plastic carry bags less than 20 microns or goods falling under the clause 17, chapter 17. So these are all not eligible. Other than that, anything that you can manufacture. Substantial expansion bolte at least 25% increase should be there. Eligible business bolte 2-star hotel or adventure or leisure sports or including roofways, because Northeast mein this is like tourism is very prominent, right? So they are encouraging these people like go with the hotel, 2-star hotel or any adventure, any ropeways you develop, or any hospital with 25 beds, running old age homes, operating vocational training institutions for hotel management. These are all eligible for them. Okay, so 100% it is 100% it is deductible for them, or they will take the deduction for 10 consecutive years. So from here you pay attention, even if you are a inter students. By now it was mostly for final, so I didn't discuss so deep into it. Now this is from here it is important. Deductions in respect of profits and gains from business of collecting and processing biodegradable waste. As I said that it is very important, like we are polluting the environment. So to make it proper, ATJJA is coming into picture, and they are saying if you are in for generating power or producing biofertilizers, biopesticides or other biological agents, or for producing biogas or making pellets or briquettes for fuel or organic manure, and you are doing that biodegradable waste for out of these things, then you will be having 5 consecutive years assessment year ke liye you will be having this deduction. What does that mean? Like whenever you start, first 5 years, for first 5 years you will not be paying any taxes. It's so nice, no? So examination mein just remember this one thing, for biodegradable ke liye 5 years there will be no tax for that. Now this is absolutely important for examination point of view. Whoever is watching so far, don't skip, don't get lazy or anything of that sort. From here it is absolutely important, guys. In examination 5 marks you will get it. Okay, for new employees, if you are hiring, this is like a make in India movement. Companies encouraging people to hire more people, like do more manufacturing. To do more manufacturing you have to hire more people. Whenever you are hiring more people, 30% will be given, but there is a trick in it. First you need to be getting your books of accounts audited, and 30% of additional benefits will be given to you. So examination point of view, 30% is important, and you should be getting your accounts book audited. But what is more important is when you call something as an additional employee, boleto, there should be increase of employees from your previous year. So last year में I had 100 employees. So there should be some increase in the employees. Same employees के लिए I cannot say there is. In the case of an existing business, so I'm already an existing manufacturer. If I want to claim the benefit under this section, the additional employee cost shall be nil if there is no increase in the number of employees from the total number of employees employed as on the last day of the previous year. So I'm the existing company, manufacturing company. Last year also there was some number, now also same number. So I cannot get it under 80 JJAA. Remember the section JJAA, it's like a fun. Emoluments are paid otherwise than by account to pay check. And one more thing, emoluments, the salary part, whatever you are paying, it should not be in cash. It's for everyone. So you should not be paying in cash. Generally, don't pay in cash. But sometimes, like you might have seen this during lockdown, a lot of daily wage workers are moving here and there. No, for them they pay in cash only generally. Okay, but they are saying we don't know whether how genuine you are really paying to those workers. I want you to pay it otherwise than by cash. Also ask them to open a bank account, Jandan account or whatever the account, that let them open the account, and from that you pay it. Then only view that okay, the company has really paid the emoluments, the salary. So the condition that you have to remember is, if it is an existing company, the number of employees should be more increased. Okay, and if it is a first time a company, the emoluments paid or payable to employees employed during the previous year shall be deemed to be additional. Okay, because it's a new company, right? Whatever the emoluments you are paying, on that you will be eligible for 80 JJAA, provided other conditions are satisfied. Other condition is the salary should not be more than 25,000 per month. Sir, why are you saying not more than? So does it mean that you have to pay less? No. If you are a CA or CMA or any BCom graduate, when you join a company, your salary will be 40,000, 50,000 or 35, that range, right? So you are not a worker here. You are not manufacturing anything. Generally, for workers, the salary is less. So I am encouraging you to generate more employees at the lower level. You don't hire a well top executive and pay that, oh, I'm paying 1 crore, so I will deduct 30%, I will take 30% extra benefit. Not like that. I want these benefits to be flown or given to the ones who are encouraging employment at the workers level. So for that reason, the salary should not be more than 25,000 per month. So lesser than that only you should be. If it is more than that, you cannot get this 80 JJAA benefit. And one more thing, that worker should be employed with you for more than 240 days. So why are you saying 240 days? What if, see, at the end of the year only you might hire 1,000 workers and you pay them only 1 year ka thing. All these jugaad Indians are known for it, right? So I want your workers to be there in your organization for at least 240 days, well, at least 8 months completely. Okay, then I can say yes, they are genuinely employees. You are employed, and you should be deducting PF, all other employee labor related laws you should be abided. It's not like only for a paper you just opened a bank account and paying salary to them. Not like that. They should be genuinely on roll. You can understand what you're on roll. They should be on roll of employment with the company for at least whole year, the 240 days minimum. And if your business is something like apparels, food or leather products, it can be 150 days also. Instead of 240 days, it can be 150 days also, fine. So you might say why? This apparels, footwear, leather, no, they don't run the manufacturing for the whole year. They will do it for 6 months and 7 months, something like that, and they'll take a break. Like they do it on a seasonal basis. So for the companies which are engaged in the seasonal basis, like apparels, footwears, like that, it is not 240 days, it is 150 days also, fine. Okay, and they should be eligible for PF. When you say they are eligible for PF, they should be registered with the PF, the employer, and you should take the employees on roll in the company. Then only this benefit is given. Any question theoretically, guys, numerically I will solve a problem. No issues. I will only solve it. I will ask you questions if you have anything. But any questions with respect to 80 JJAA, I am repeating it multiple times. If it comes, it can be 4 mark to 6 marks question directly. Straightforward question. Condition, salary should not be more than 25,000. Condition, you should be eligible for PF. Condition, you should not be paying in cash. Condition, you should be there for the company for 40 days or 150 days as the case may be, depending upon the seasonality. Condition, if you are an existing company, the number of employees should be more than what is happening at the end of the year, closing of the year, say your number of employees should be more. If it is a new company, entire thing is fine. Yeah. Any questions to anyone? Then I can move further with this question. No, this is 80 JJAA. JJAA. Okay, I'll solve this question. Please pay attention here. Very important, guys. Mr. Vikas has commenced the business of manufacturing. Commenced about the new business. So entire is eligible provided other conditions are satisfied. On this date of 1st April 2022. Well, the beginning of the year only started, so you can count the number of days. Employed 420 new, number is also nice, no? 420 new employees during the year. The details of whom are given as follows. 420, dekho, 25, 75 plus 125 plus 100, 120 plus 100. So it is 420. Date of employment they have given completely. So why date of employment is given? So that you calculate the number of days. It should be 240 days. If he has joined on the opening date, he is eligible. It's staying, the employees are staying for the entire year. Remember, they have hired 75 employees on this particular day, 125 employees on this particular day, 120 employees on this particular day, 100 employees on this particular day. The reason is we have to calculate from that date to the end of the year how many days are there. So 240 days also 1st April May they will be eligible. 1st May you calculate, I don't know. First casual employees not eligible. I said, I didn't tell you this. They should be regular employees. They should not be casual contract employees, not eligible. Casual, they should be regular employees. And this is also regular. Just calculate the number of days. I don't know. I will wait for your answer. First ke liye to it's eligible. Second ke liye you calculate whether 240 days are coming. May said 31st March of next year tak. And these are all not eligible because they are casual. And the total monthly emoluments as per the employees 24,000 they are eligible. 26,000 they are not eligible. As I said, the emoluments should not be, the salary should not be more than 25,000. So this guy is not eligible. There is no question of you calculate the number of days. Is emoluments are correct only, but number of days I don't know. You have to check it out. Okay, so this is a status. Now you have to calculate how much they are eligible. Can I have answer, guys? For this you don't calculate. Is eligible, is crossed, this is crossed, last one September bole to it is crossed. Only for 100 also not eligible. Correct, Jagapati. Correct. Okay, so the reason September bole to September. So September, October, November, December, 4 plus 3, 7 multiplied by 30, 240 days, but we need 10 days, sorry, 240 days, right? So these are, he is not eligible, the last guy is. So only 75, these people are only eligible. So how much we are paying? 75 multiplied by 24,000 multiplied by 1st April throughout year, 12 months multiplied by 30%. Oh. 75 multiplied by 24,000 multiplied by 12 multiplied by 30. So 64 lakh 80,000 80 JJAA Let's see the answer. 64, 88, 80, JJ. Any question so far? The answer is not yet completed, but any question so far, guys, it might appear to be silly, but in examination you will be getting 4 marks. I have seen question papers with this question couple of times, 3-4 times, to be honest. I don't know in which attempt, but there's a possibility that this can be your examination question. Any question, please let me know, but in examination there is no room for mistake. When I'm shouting so much, that is a minimum respect from your end that you will not make mistake relating to these questions, at least the topics that I'm covering in the covering in live. Anyone? Any question? At least couple of times. Sir, last date for CA Inter registration for November. I'm not sure, Chandrika, because I don't keep track of registration dates. I'm sorry. Please Google it or ask someone else. 30% is given in the law only. 30% is given in the section only. 30% is given in the section only. Additional, whatever the remaining normal salary you are paying, everything you will debit to P&L, no issues. This 30 is additionally you will claim. %30 in examination point of view, remember, for section. Yeah, correct. Okay, Raju. Okay, so now it is clear, right? Now the question is, the regular employees participated in the recognized provident fund. The condition, one of the conditions is that they should be regular employees and casual employees do not. That is the reason why casual employees were not considered. Compute the deductions, if any, available to this person if the profits and gains of the derived from the manufacturing of company computers that year is 90 lakh and his total turnover is 11.48 crores. So they are subjected to audit. One of the conditions is they should be subjected to audit. Yes, they are subjected to audit, and they should be eligible for PF. They are eligible for PF. So every condition is satisfied. So would your answer be, what would be your answer if Mr. Vikas has commenced the business of manufacturing of leather? So leather ke liye I told you it is a seasonal business for manufacturing sector. So that business need not calculate for leather business you will substitute 240 days with 150 days. So now check this fellow, because 26,000 is more than 25,000 is never eligible, and second person casual is also never eligible. Check for the September, is it coming 150 days? Just now we calculated it is 210 days. So this guy also will be eligible if the business that they are operating is a leather business or any apparel business. 100% is eligible. No, Jagapati, you are misinterpreting the provision. For everyone it is 30% only. See, earlier what we have done, we have taken only 75, right? 75 multiplied by 24,000 multiplied by 12 multiplied by 30. So if it is a leather, he will take that benefit also. Along with that, he will take 100. Okay, I'm sorry, 100 employees. No, correct. Okay, I didn't read it properly. Jagapati, you're right. So 100 multiplied by, we are paying 24,000, and when we are paying September, no, September, October, November, December, Jan, Feb, March, only for 8 months, multiplied by 8 multiplied by 30%. Don't do 12%, 12 months, because they are hired on September, right? So 1st September se baad mein, yeah, you're correct, Jagapati. So 1st September ka baad mein, whatever we are paying, that much only he will be eligible under 80 JJAE. Any questions here, or are we going too fast? See, I am thinking like a student. That is the reason why I am not going any fast. And lot of people are commenting also, saying that the sessions are too long for us to revise. Even then I am getting a negative comment. I am continuing with this flow. The reason is that we want to touch upon every point of the provision so that we are confident while giving an answer in the examination. Okay. Otherwise, this chapter I could have completed in 45 minutes and recorded a session for you. But we will not be applying anything there. Okay, any questions from anyone? Any question from anyone? Coming to the next one. Again, this is lesser important, but I just run through fastly, just in case out of our bad luck, if it comes also, you will be in a position to answer it. Deductions in respect of certain income of offshore banking units and international financial centers. Okay, so for them there are some more extra benefits, like a scheduled bank having offshore banking unit in CEZ. So their bank business is located in CEZ. As I explained this multiple times, for CEZ there are a lot of benefits. Even GST also, when you're exporting, customs also, there are a lot of provisions. CEZ they will have a lot of benefits. Whenever we do GST and GST, we'll discuss that also. Okay, and IFSC center also, they have some more extra benefits. So next, deductions in respect of certain income of offshore banking units and international financial centers, LA, which are located in CEZ, 100% for first 5 years. Any bank incorporated by or under any law of a country outside India and having an offshore banking unit in CEZ, whose gross total income includes unit of IFSC, I'm directly reading it, 50%. Okay, first 5 years 100%, thereafter 5 years 50% for the next 5 years. Okay, I'll repeat, I just got it clarity. I got confused there. See, there is a HSBC, that is not an Indian company, that is registered in some other country. Okay, that country I don't remember that country. So they are having an offshore business. Offshore bole a branch outside their country. See, for me, if I'm having offshore branch, means I'm having a branch in US, like that, for that banking company or any US company. Nowadays some bank has collapsed, right, like that. So they're having an operation in India, so that is the reason why we are calling it offshore bank. And that branch is also not anywhere, like wherever I'm taking this session, not here, in CEZ they are having. So for them to encourage, I mean, India encourages everyone who comes for CEZ and IFSC. First 5 years के लिए 100% is deduction. For the next 5 years के लिए 50% of your income will be deducted or given the benefit. You need not pay tax on that. If it is IFSC, 100% of such income for takes 10 consecutive years at the option of the assessee out of 15, which means that for first 15 years में, any 10 years that you can select. See, for this is a offshore unit in CEZ. For offshore unit in CEZ, first 5 years 100%, remaining 5 years 50%. But if it is IFSC, again more benefit. Out of 15 years, you select 10 years, that will be 100% deduction. See, I understand, guys. If something is not covered, just ignore it. The reason is that for some people it is applicable. So I don't want to kind of not cover this. If it is not covered, just ignore this. Deductions in respect of intercorporated dividend. So this also I explained little bit. I am a holding company. Okay, there is a subsidiary company. The company is declaring dividend. So obviously the dividend, it will come to me. When it comes to me, no, they also already paid the tax on that. Now again I'm declaring dividend. So dividend is being declared by two parties, one by subsidiary, one by holding in the same financial year. That time they will get this benefit 80M. So this is a relief actually. Deductions under this section would be allowable to domestic company. It's only for domestic company. So in examination you can remember that. If the gross total income includes any previous year, any income by way of dividend received from any other domestic company or a foreign company or a business trust. So one point you have to be clear here. This special purpose vehicle, I was keep telling multiple times at multiple locations. If you are following from last 3 days, everywhere I am saying that the business trust will create a special purpose vehicle. So the special purpose vehicle, when they are paying interest, when they are paying dividend, it should not be taxable, because again both are kind of one and the same bolki na. Again this is also discussing the same thing. I am the holding company, I am the Indian company. The holding company should be Indian company, or the company which is taking the benefit should be an Indian company, domestic company. The subsidiary company can be a special purpose vehicle, okay, that can be a foreign company, that can be an Indian company, any three are possible, but the company for which you are applying this section should be an Indian company, okay. What is the quantum of deduction? In computing the total income of such a domestic company, a deduction of an amount equal to the amount of dividend received from such a domestic company or a foreign company or a business trust as does not exceed the amount of dividend distributed by such a domestic company on or before the due date. I'll explain with the example. Anyway, they have given the example also. I'm receiving some amount, I'm declaring some dividend, right? Whichever is lower is the deduction for under this section 80M. In simple words, deduction under this section would be a amount of dividend received from other domestic company or a foreign company or a business trust, or a dividend distributed by the domestic company, whichever is lower. They are giving a declaration, they are declaring some amount, I am declaring some amount, whichever is lower than this. Example, you see, X Limited, a domestic company, received a dividend of 10 lakh from Y Limited, a domestic company, 100% subsidiary of X Limited. So I'll just make a chart here. X Limited, this is a holding company. Y Limited, this is a subsidiary company. They have invested dividend, no? When they are declaring dividend, X Limited declared dividend of 5 lakhs. So they are declaring dividend. They are also declaring dividend. For whom we are applying 80M, because it is an Indian company and they are holding the complete ownership in the other company. How much ever is whichever is lower. So 10 lakhs received by them from the subsidiary, or 5 lakhs what they have declared, whichever is lower, that they are eligible for deduction under 80M. I hope this is clear. In case if it comes for examination, in case if it is first of all applicable to you, I have seen for CMS students it is applicable. If it is not applicable for CA students, please ignore it. So lower of these two will be exempted, deducted. Cooperative society is also same thing. At a final level, this will be more applicable. Eligible income for deduction and quantum of deduction. 100% deduction shall be allowed in respect of profits and gains attributable to any or one of the more of the following activities of a cooperative society. For cooperative societies also, they have given lot of benefits. I am not going in detail of it. Upar I am just reading and going to the next one. Hello. Guys, are you getting my voice? Hello. Hello. Okay, it is clear now, right? So we can continue. Yeah. So I'm not going to do that. I think it will be boring for you. For producer companies also there are certain benefits. They'll also take 100% benefit there. And this is important for inter-level students, and you can expect one bit, I mean out of 3-4 bits if they give this question, you can expect. Wherever it is important, I highlighted and I put it a star mark, and absolutely there is no way that you will leave those sections and go to the examination hall. It's section, slab rate, amount, limit, to whom it is applicable, everything has to be on your fingertips. Deductions in respect of royalty income of authors of certain books other than textbooks. Now in 10th class or intermediate, we buy textbooks, right? So those textbooks ke liye for authors it is not applicable. It's for something other than that. Under section QQB, a deduction up to 3 lakh rupees is allowed to an individual resident in India. Again, it is only for individual and who also has to be a resident in India, being an author, including a joint author. So joint author, also two people together write one thing, right? Sometimes it so happens. So them individually they can claim this benefit. In respect of income derived by him in the exercise of his profession, deduction shall be the income derived as an author 3 lakh, whichever is less. So whatever they get, or 3 lakh, whichever is less, that will be 80 QQB deduction. So exam may just remember 3 lakhs, guys. That's it. Authors of book other than textbook 3 lakh rupees. That's it. And school textbooks are not available. This income may be received either by a way of lump sum consideration or for the assignment or grant of any income interest in the copyright of any book. Such books should be a work of literacy, artistic, scientific nature, or royalties or copyright fees. Okay, so you understand, other than textbook, everything that they write, they'll get 3 lakh rupees as a deduction. This deduction shall not, however, be available in respect of royalty income from brochures, commentaries, diaries, guides, journals, magazines, newspaper, pamphlets, textbooks for schools, tracts, or other publications. So this is, I would say, is important for examination, because deliberately they give and they ask a question. Would your answer be different if the author is dealing with this or something like diaries or something like guides or something journals? They are not applicable for them. So what is the manner of deduction? For the purpose of calculating the deduction under this section, amount of eligible income, royalty of copyright received or otherwise than by lump sum before allowing expenses allowable to such income shall be not exceed 15% of the value of the books sold during the relevant previous year. So what does this mean? If someone is receiving a lump sum amount, it should not exceed 15. It should not exceed 15% of the value of the books sold. Okay. I will do one problem on this, you will understand this. And if you are selling it in an outside country, within 6 months you have to bring back the money, like that is called repatriation. There is one question. Let's see how many of you can answer this one. Mr. Akash earned a royalty of this much from a foreign country for a book authorized by him being a work of literary nature. So he is eligible under a QQB. The rate of the royalty is 18% of the value of the book. So one book ke liye he'll be receiving 18%. The expenditure incurred by him for earning this income is 40,000. So 2,88,000 is the net amount that is received, but he again had to incur 40,000. The amount remitted to the India till this date is only 2,30,000. I told within 6 months he should to bring. So now you check the dates, okay, whether he has brought to India by that date, like what is the amount that he brought to India, repatriated to India. The remaining amount was not remitted till 31st March, so he failed that condition. Calculate the amount of amount included in gross total income and the amount deductible which is eligible under QQB. Okay, so what is his income from other source? What is 80 QQB? I'll give a minute. I'll also take some break. Few people are there, I understand. Whoever is watching, just give me the answer. How much he will be eligible here? It's been 2 hours. Our session has started. We will complete in next to 10 minutes, guys, if you feel that it's going over the head. These questions are generally asked in the examination, so I'm very rigid, and I'm sure that you should be clear with these provisions. 4-5 people are there. I will do, and I will not write it here. 2,88,000 he received as a 18%, so 100% is 16 lakh. 16 lakhs is 100% and he should be getting only 15% should be taxable. So 2,40,000 is taxable. 2,40,000. He brought 2,88,000. So 2,88,000. Okay, this is fine. 2,40,000 should have done. 2,30,000 only brought it. Okay, I'll give the answer now. But let's wait for the answer. Okay, so your answer is correct, Jagapati Babu. Well, good, well done. I'll explain once. So he is bringing 2,88,000, right? So income from other source mein 2,88,000 is income and is spending 40,000 as an expenditure. So 2,44,000 is the income from other source. Coming to 80 QQB, see it is 18% is received 2,44,000, right? Before expenditure, the provision is saying before expenditure. So 2,88,000 is bringing for 18%. What would have been it for if it was for 15%? Just like grossing it up. 288 divided by 18% multiplied by 15%. So 2,40,000 is eligible for QQB, but the point is he has repatriated only 2,30,000. So it should be restricted to 2,30,000 only, because that is the amount that he brought it to India. India is very sure. I mean, like, we are very firm. When you are exporting something, it's not that you take the benefit. You bring the money to India. We want foreign dollars. 2,30,000 only he will be eligible for QQB, and expenditure he claimed is 40,000. So anyway, he is getting the benefit, right? So 1,90,000 is ultimately he will eligible under 80 QQB. Your answer is right, Jagapati Babu. Any questions, Jacob? Income from other sources 2,30,000 to 2,30,000 is QQB, but income, see, income ke liye whatever he is earning, that is his income, that's it. He's he's earning 2,88,000. So assuming that he is maintaining the books of accounts on accrual basis, 2,88,000 is his total income minus 40,000 whatever he paid, that is expenditure. So remaining amount is taxable income from other source. So I think somewhere I wrote 2,44,000 is taxable under income from other source. Coming to 80 QQB, you will be grossing it up. 18% के लिए he got 2,88,000 बोले तो how much you would have got it for 15%? You brought 2,40,000 had it been 15%. But thing is that he has repatriated only 2,30,000, right? So 2,30,000 only will be given as a 80 QQB deduction, and after that 40 also deducted. So you might ask a question, why we are deducting 40? बोले तो anyway you are deducted from your income only, right? Income say you are deducting 40. So why you want again the benefit in 80 QQB? You deduct 40 here also, remaining only eligible for QQB. And RRB, see QQB, RRB, these two sections are important for examination. Both are like one and the same, only it appears to be same. This is for deduction in respect of royalty and patent. That was for textbooks and copyrights के लिए. This is for your patent के लिए. Again 3 lakhs is the same amount. If you are receiving in amount 6 months के अंदर you should bring the money back. So that is one thing. There is nothing more into it. Deductions in respect of interest on deposits in saving account, TTA. So TTA, TTB, these two sections we have to show, we have to check, then only we have to close the session. So even though we are getting late, I am not closing it. The reason is important while you are doing salary head or total income problems. Okay, so when you are individual or HUF, any income includes by way of interest on deposits in a saving account not being a time deposit, which are deposits prepayable on expiry of fixed deposit. Deduction of 10,000 in aggregate shall be allowed in computing the total income of such assessee. Such deduction shall be allowed in case of savings account maintained with the banking account and all this company. Simply when you are having a saving account and the bank is paying you some interest, right? So you will claim it under 80 TTA. Okay, how much is 10,000? Exam, this is only important. you have to remember this 10,000 and section 10A TTA. It's not applicable for your time deposits, it is applicable for your other than that. Okay, for your savings account also it is eligible. And restriction, this restriction I said it in the beginning only, when AOP is getting that benefit, members should not get the benefit. AOP is claiming this, members should not be claiming this. 80 TTB is for senior citizens, 80 TTA is for normal people, 10,000 savings account, this simple funda. But 80 TTB is for senior citizens. Okay, so senior citizens it is 50,000 whenever the bank is paying or cooperative society is paying or post office paying, and your age is 60 years or more anytime during the previous year, and 50,000 tak you can take the 80 TTB, 80 TTA, 80 TTB. These two you read it simultaneously. So there is one question. I am not solving it. I think we are running out of time. So last section, deductions in respect of 80U. So 80C is starting, 80U is your last, and anybody who is dealing with the disability, they will be claiming it here. 75,000 and 1,25,000 depending upon the disability, they will be getting this benefit, and it is not depending upon any actual expenditure. Okay, it's just that the person is disabled, so he should be given a better tax relief there. So that is the reason why 75,000 and 1,25,000 they will take it. Okay, and maybe when we are doing clubbing chapter, it will come back to you. Whenever clubbing the son or whoever no, he is suffering from disability under 80, it be his own hand only. Is that in his own hand, they will be having again basic exemption limit, and they will also be getting this benefit of 75,000 and 1,25,000. Okay, so that's it, guys. I think I have rushed up a little bit, but given the time that we have, I really wanted to complete all the provisions. At a final level, I didn't touch many things. I was just running through, but at an inter level, we have gone through every last corner of the provision. So yes, it is flat deduction under section 80U also. Okay, so thank you very much, and we'll meet in the next session. And if you really like the video, just give a like, guys. Okay, that just makes me realize that you are liking the session, and just put it in the comment that you are liking or you are not liking. How is your feeling about the session, so that when someone comes to the session, they will just have a look at it. And the last 1 month is very important for your examination. Please don't get deviated from anything, be social media or be anything. This last 1 month will decide whether you are writing one more 6 attempt, 6 months ke baad mein one more time you are writing, or you are going to the final level. So that is the reason why the last 1 month is very important. Keep yourself away from all distractions and give your best shot. Once you clear, it is really worthy. Whatever the effort that you are putting, every last corner will be worth. And people who have qualified, they understand the importance of this qualification, CA or CMA or CS, whatever it may be. So last 1 month, little bit of laziness will cost your 6 months, and we don't know what will happen after 6 months, who are in a position to write or not, right? So that is the reason why give your best shot for last 1 month. Thanks for watching, guys. We'll meet in the next session. Good night.